Okay. Good morning. Good morning, everyone. Good morning, Pooja. Good morning, Jeannie. Good morning, Niranjan, Shabir, Hemant, Mamta. Good morning, everyone. Okay. So, in days 12, last class, I think we had covered some basic principles and we were halfway through closing the deferred tax assets liabilities. We were on the exceptions part, and what I recollect was we had done a fair bit of examples and we were left with fair bit of what you can say homework questions. Okay, so let me see if you have any queries. Jeannie has asked question number 4, homework, slide number 23, 26, 25, 23. Please explain investment in subsidiaries and trade receivables as the adjustment for calculating the tax base was not clear. Okay. Okay. So let me see what is the adjustment. What about the others? Did you guys try the homework questions? A doubt on investment in subsidiaries. Okay. 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 Fine. Same doubt. Question 4. You're talking about this question only, right?
Yes, sir.
Gotcha. Okay. So, since there are two students who are having the same doubt, I will just quickly address that. Of course, we'll look into the solution as well, but let us understand. Uh, okay. I'm having an investment in subsidiary appearing at 1 crore 54 lakhs in your balance sheet. Okay. Now, when I talk about investment in subsidiaries, um, what is the nature of your doubt?
सर इसमें एक्चुअली वो टैक्स बेस कैलकुलेट करना है। तो इसमें क्या दिया था ना, यानी जो आंसर दिया हुआ था उसमें ये पूरा का पूरा वैसा का वैसा ही टैक्स बेस यहाँ पे भी अ, डाला हुआ है। कैरिंग अमाउंट इक्वल्स टू टैक्स बेस।
Okay, this is your question. ये सेम
हाँ।
क्यों है, right?
हाँ,
Okay, fine.
एक्चुअली सर टैक्स बेस कैलकुलेट करने में ना थोड़ा सा कंफ्यूजन
हुआ
रहा,
था
यानी इसका
हो सकता है.
प्रॉपर मीनिंग क्लियर नहीं हो पा रहा था।
Okay, fine. So what I will do is, let me run through each adjustment in brief. Okay, more or less you would have done it right. I don't doubt it. But फिर भी एक बार देख लेते हैं कि what do we mean by the tax base,
ओके।
and then you can get an understanding. So let us run depreciation expense allowable for financial year 7-8 as per the income tax rules is 72 lakh 10,000. Depreciation allowed for the purposes of financial reporting included in operating costs is 59 lakh 50,000. Cost of property, plant, equipment is 5.6 crores and H deducted expenses of 1.456 crores in its tax returns prior to FY78. Further, as of March X8, H Limited for the first time revalued its property, plant and equipment to the market value of 4.2 crores, resulting in a reval surplus of 30 lakhs 80,000. Okay. So tell me one thing, this revaluation, is this the value at which the assets are appearing in the financial statements?
Yes, sir.
So isme there is no doubt, right?
Certainly.
Now coming to the tax base on this part, what is it saying? Mhm. Cost of the asset is 5 crore 60 lakhs, correct? There is nothing much for me to add on this.
Yes, sir.
Depreciation for this year is 72 lakh 10,000 and the depreciation for the preceding years is 1 crore 45 lakh 60,000. That's about it. Okay. So when I do this subtraction, I will be getting 3 crore 42 lakh 30,000. So this is what is going to be your tax base. Okay. ये समझ में आ गया?
Yes, sir. Yes.
Okay, fine. I will do one by one. I may go a little fast, but that's okay. All right. So those who are having some doubts, they can also get it cleared as and when I do it. Okay. In X4, X5, H Limited incurred product development cost of 35 lakhs. These costs were recognized as an asset under Ind AS 38 and amortized over 10 years. For tax, H Limited deducted the full product development costs in X4, X5. So full product development cost means obviously the balance sheet for tax, I mean the tax base is going to be zero because in the tax balance sheet or tax financials, you would have taken it to the profit entirely. You would have expensed it out entirely. Okay. So
Yes.
hope this is clear. Okay.
Yes, sir.
Trade investments were acquired in 6-7 at a cost of 80 lakh 50,000. Now, here the tax department will record these investments at 80 lakh 50. These investments are classified at fair value through P&L and thus recognized in the fair value. Fair value adjustments are not allowed by the tax authorities. Okay, fine. So 80 lakh 50 is your tax base. And obviously, this will be the accounting base or carrying amount, which is essentially the fair value at which the investments are recorded. Is it okay till now, everyone?
Yes, sir.
अच्छा, now बात करते हैं. If I look at my financials, I completed property, plant, equipment. We completed intangibles. We completed trade investments. Now,
Sir,
I have
sir,
some.
sir, 1 minute. Sir, trading investments, shall we assume that there won't be any tax on capital gain?
Uh, there could be, I mean, I don't deny that, but as I come later, you will see that what rate do I apply for my deferred tax calculation will depend on the manner in which you intend to liquidate the asset. Okay. So when I talk about the manner in which you intend to liquidate, if I intend to liquidate and I treat it as a capital asset and therefore capital gains will accrue, then you will obviously take it as a capital gain and accrue your deferred tax based on the capital gains rate that is applicable to it. Is it okay?
Okay, sir.
Yes. तो यहाँ पे क्वेश्चन में I don't think that different rates are given for capital gains etc. So we shall proceed with whatever data is given directly in the question. Otherwise, if you have different rates, like for business income, the rate is 30%, capital gains 20, then accordingly you will do your tax workings also in a similar manner. Okay. I have one item that is investment in subsidiary. Now, this data is not given anywhere in the question कि इसका adjustment क्या करें. So there are two ways you can approach. The first way and the obvious way is, सर कोई data नहीं है investment in subsidiary के बारे में. There is no information given in the question. So in absence of information, tax base equals carrying amount. Can you say that? Yes. Come on, tell me. Look at the adjustments. This is about bad debt provision. This is about inventory provision, government grants, product warranty, medical benefits, penalties, expenses for petrol. So where is there anything related to investment in subsidiary? There is nothing related to investment in subsidiary. So can I say that in absence of information, tax base is assumed to be the same as carrying amount?
तो सर यानी अगर ये कैरिंग अमाउंट को हम जैसा का तैसा रहने देंगे तो ये टैक्सेबल होगा?
Tax. टैक्सेबल होगा, ये इन्वेस्टमेंट है, ये कोई प्रॉफिट या लॉस नहीं है।
यस सर।
तो आप क्या कह
सर
रहे थे?
नाउ क्लियर क्लियर सर।
Okay. So this
यस
is one way of understanding it, because right now at this moment we are unable to understand the investments. Okay. But there is, once you read your financial instruments and consolidation, you will understand that investment in subsidiaries, the entities have an option. They can take it at fair value because they are investment in equity, and equity can always be fair valued. But if they are investment in a subsidiary, your intention is never to milk the value from them through fair value gains or losses. But these are just tools through which you are furthering your business activities. And therefore, Ind AS 109 tells you that for investments in subsidiaries, associates, joint ventures, you can continue to recognize the investments at cost. You can continue to recognize these investments and cost at cost. There is no need to do a fair valuation. For all other investment in equity shares, you have to do a mandatory fair valuation. But these three, which three? Investment in subsidiary, associates, joint ventures, you will be given an option to take it at cost. Assuming that this option is taken, this would be at cost. And anyways, tax base will always mean they will record the asset at cost, because that would be the actual cash outflow that happens. So the entry that would be passed is investment in subsidiary account debit to bank, both in the accounting books as well as the tax books. And that is why it is going to be 1.54 crores. Is it okay?
यस सर।
So you can take it this way also. There is no problem. Okay, coming to the next part, trade investments. I hope this is clear. Okay, now we come to bad debt provision. Okay, bad debt provision is 45 lakh 50,000 and relates to two debtors. Debtor X 28 lakhs, a receivable of 5/6, 100% provision was recognized in 6/7, and debtor 17 lakh 50,000, receivable of 6/7, 100% provision was recognized in 7/8. The tax law allows a deduction of 20% of provision for debtors overdue for more than 1 year, another 30% for debtors overdue for more than 2 years, and remaining 50% for debtors overdue for more than 3 years. Okay, so now let us look at the data. Okay, this is there. Trade receivables. 2 crore 19 lakh 10,000 is what is your value which is appearing in the financial statements. Look at the liabilities. Do you see any provision for bad debts appearing on the liability side? Provision for bad debts? It's not there.
नो सर।
It should not be there also, because is this provision the nature of provisions we studied in Ind AS 37? A provision for bad debt, a provision for depreciation. Are these provisions the provisions what we studied in Ind AS 37? Ind AS 37 is provision means a liability with an uncertain amount or uncertain timing. ये liability नहीं है. This is a reduction in the value of an asset. So therefore, these are not Ind AS 37 provisions. These are provisions which are netted off from the value of the asset. So this trade receivables is after provision net off. Are you able to understand?
यस सर।
Yes. Any doubt so far? Okay, fine. So now let us continue. So in my accounting books, debtors is appearing at 2 crore 19 lakh 10,000. Okay, so this is your debtors. Now I have to calculate the tax base. So tax base के लिए let us start with debtors. कितना है 2,19,10,000. दिस इज नॉट माई टैक्स बेस, दिस इज द वैल्यू एज पर बुक्स. ओके. Now, the tax department has given certain rules for allowing the bad debt provision as an expense. Has it given certain rules? Yes, you have those rules. Those rules mention that 20% first year you will be allowed, 30% second year, 50% third year. So these criteria are given. In your accounting, you would be probably providing immediately after 1 year is over. So what is the total provision that you have made? The total provision that you have made is 45,50,000. Are you able to understand this? Yes.
Yes, sir.
So what I will do is I will add provision 45,50,000. So this comes to how much? 2,64,60,000. What is this? This is gross value of debtors. Again, this is as per books, not tax base. Are you able to follow? Yes. यहाँ
Sir.
तक clear है?
Hmm.
Yes.
Yes, sir.
Hemant, are you able to follow? Okay. All right. Now, let us look at the adjustment. What the adjustment is saying, it relates to two debtors, debtor X and debtor Y. Okay. So now we talk about this provision figure. Okay. So 45,50,000 pertains to two debtors, X, Y. So X is a debtor of 5,600 and the value of the provision is 28 lakhs. 20x5x6 28 lakhs and Y is 17 lakh 50,6,7. 17 lakh 50. Adding both of them, it comes to 45 lakh 50,000. Now look at the adjustment carefully. What is it saying? The tax law allows a deduction of 20% of provision for debtors overdue for more than 1 year. Okay. Another 30% for debtors overdue for more than 2 years. And remaining 50% for debtors overdue for more than 3 years. So first year overdue 20%. Second year after overdue another 30%. Then balance 50%. I am preparing the balance sheet as at 31st March 20x8. Okay. So now based on this, let us look at our understanding. Okay. Now, I am at the balance sheet date 20x8. This debtor is pertaining to the year 20x5x6. Yes, that means how many years have passed? कितने साल हो गए? Is it 1 year overdue or more than 2 years overdue?
Sir, it is more than 2 year overdue. No?
More than 2 years. ये तीसरा साल है, right? This is the third year, correct?
Yes, sir.
Everybody following this? This is the third year. So now, how much will be the allowable provision? Therefore, allowable provision for tax is equal to year 1 overdue 20% and year 2 overdue 30%. Yes or no?
Yes, sir.
पूजा कंफर्म, जीनी
Yes,
ओके?
sir. Yes, sir. Clear, clear.
यस, तो यानी मुझे 50% का डिडक्शन मिलेगा अंडर द टैक्स अथॉरिटीज, फ्रॉम द टैक्स अथॉरिटीज. सो दैट इज इक्वल टू 14 lakhs. Okay. This is your first figure of tax allowable provision. Any doubt so far?
No, sir.
Okay. Acha, 6, 7. This was a receivable that came in the year 6-7. As of now, is it past 1 year overdue or past 2 year overdue?
1 year.
1 year हो गया? Yes,
Yes,
1 year is done. So therefore, allowable provision
20%.
for tax purpose is equal to 20%. So that is equal to 17,50,000 into 20%, 3,50,000. Are you able to follow? Yes.
yes, sir.
So therefore, tax base of provision for doubtful debts is equal to 14 lakh plus 3,50,000, 17,50,000. Are you able to follow? Yes.
Yes.
Therefore, tax base of receivables net is equal to 2 crore 64 lakh 60 minus 17 lakh 50. तो कितना होता है 2 crore 47 lakh 10,000. Any doubts here? Any doubts?
Clear, sir. Now
Okay,
understood.
Pooja has also understood. Okay, fine. So that takes care of adjustment 4. Adjustment 5, H Limited created a provision for inventory obsolescence in line with Ind AS 2. New provision created in X7, X8 was 3,78,000. Total provision is 6,30,000. Being a general provision, this is not tax deductible. So obviously your inventory value that is coming in the financials is net of the provision. Okay, 1 crore 6,40,000. This is after provision net off. So you will have to add back the provision. What are you going to add back? Are you going to add back current year or are you going to add back the total value? New provision created 3,78,000, total provision 6,30,000. क्या add back करोगे for the tax base? You will add back the total because this is what is your closing balance. This is what is your closing balance. So therefore, tax base would be equal to कितना है 1 crore 6,40,000 plus 6,30,000. So that comes to 1 crore 12,70,000. Are you able to understand? Yes. Jeannie? Pooja confirmed. Okay. Thank you.
Yes, sir. Clear.
So this is done. Government grants are not taxable. Okay. Full government grants received in X7, X8 is included in the statement of financial position as a deferred revenue grant in terms of Ind AS 20. So therefore, the carrying amount of this grant is appearing at 14 lakhs. Okay. And it is not having any tax implication. It is not having any tax implication. And therefore, its value is 0. Its value is 0. Any doubts?
No doubt, sir.
Okay. The product warranty cost increased by 1,75,000. They are not tax deductible. Claims paid in X7, X8 amounted to 2,17,000. So this is a regular treatment. Yes, you will not have this allowable for your tax purposes. So your tax base will be 0. But your product warranty costs, which is appearing at 5,60,000, will continue to be your carrying amount. Okay, so that is done. Next, during the year, H Limited introduced medical benefits for employees. These expenses are allowable for tax purposes only when benefits are paid, but in line with Ind AS 19, recognized in P&L whenever the employees provide the service. Okay, all right. So now, do we have this impact somewhere? Yes, medical benefits for employees, 24,50,000. Okay, and the value of that is 0 for tax purposes. Penalty towards violation of laws, 63,000. These are not tax deductible. These are not deductible for tax purposes. Okay. Okay. Next. Will this be a temporary or a permanent difference? Penalties? Permanent difference. So no implication as such. Okay. Tax law allows to deduct expenses for petrol up to 1,40,000 per vehicle per year. H Limited had 4 vehicles in 7/8. The total petrol expenses amounted to 7,21,000. So that's about it. So if you look at the solution, you have the workings, PPE, product development, investment in subsidiary, trade investments, trade receivables, inventories, cash and cash equivalents, same, government grants, product warranty, trade payables, medical benefits for employees. All of that put together gives rise to your DTA and DTM. Any doubts so far? No
No,
doubts?
everything clear.
Hemant, all clear? Yes. Baki, you
Thank you,
guys
sir.
tried the remaining small questions जो थे? Yes?
Yes, sir.
Okay, fine, good. So let us move on to the next one. Identification of excess.
सर एक क्वेश्चन में
बताइए,
एक जो स्मॉल क्वेश्चन था
बोलिए
उसके
ना।
एक लाइन थी accumulated depreciation of assets in the financial statement is greater than the cumulative depreciation allowed up to the end of reporting period for that purpose, tax purpose. That means ये ना कि वन गो में टैक्स में अलाउ हो जाता है तो डिफरेंस आता है और एक बार में इधर हम लोग डिवाइड बाय एसएलएम बेसिस पे करते हैं,
एक
यही कहना चाह
मिनट।
रहे हैं ना
हाँ, बट ये है कहाँ पे?
सर? एक मिनट मुझे
इसमें है
यस सर, ये रहा 32.2 का।
32 स्लाइड नंबर क्या?
नो सर, एग्जाम्पल नंबर 32.2।
32.2. Okay. Accumulated depreciation of an asset in the financial statements is greater than cumulative depreciation allowed up to the end of the reporting period for tax purposes. तो आपने क्या बताया?
सर सेम कॉन्सेप्ट लगता है ना कि जो हमें वन गो में अलाउ होता है एंड जो हम एसएलएम बेसिस से डिवाइड करके लेते हैं, राइट?
ओके, मैं सिंपल
आई एम
बता
लिटिल
देता हूँ
कंफ्यूज्ड अबाउट
numbers में।
दिस।
So, accumulated depreciation of an asset in financial statements is 60 and this is 40.
40, राइट?
Is greater than the cumulative depreciation allowed up to the end of the reporting period. Okay, so asset value हो गया 40 और ये हो गया 60.
60।
Yes.
डिफरेंस इज 40 माइनस 60, 20 के ऊपर टैक्स लग जाएगा, राइट?
हाँ, yes. But ये बताइए, will it be a DTA or a DTL?
सर डीटीए,
DTA.
डिडक्शन
Yes.
कर।
Yes, that's right. It will be a deductible temporary difference. That's right. Perfect. सही है आपका। और कुछ?
नो सर, बस यही कंफर्म करना था एक्चुअली, आई एम मतलब अंडरस्टैंडिंग।
Okay, perfect. Anybody has any doubts? Any other doubts? Shabbir, Niranjan, Mamta. Yes, Usha. All clear? So let us then proceed further. Okay. Now, recognition of DTA DTL for goodwill arising in a business combination. Okay. So now let us understand how does goodwill come into existence. Okay. You people have done consolidation, right? In your intermediate. Yes. In intermediate, you guys have done na consolidation. अरे बोलो यार.
Yes, sir.
हाँ. तो गुडविल क्यों आता है? Why do you have goodwill?
The
Access
value of
payment, sir.
consideration we pay for the business
Access
acquired
payment.
is greater than the net asset value of the
Okay.
business acquired.
Okay. So this is again in today's contemporary accounting scenario, this is a very contentious issue. See, we accountants are conservative, but we accountants also have a problem in being conservative. When you are paying extra, when you are paying extra for something, why are we recognizing a goodwill out of it? Why don't we recognize it as a loss? Right? 100 की चीज आप 150 में खरीद रहे हो, तो उसको हम गुडविल क्यों समझते हैं? द डिफरेंशियल ऑफ 50. Okay?
वो goodwill से
That's contentious. That is
okay.
not a part of my discussion between you and me for today. Okay? But इस बात पे there is a discussion that is happening at the highest levels of the standard setting framework. Okay? That why do we need to have goodwill in the first place? Okay? So coming to the other part, you guys are absolutely right. Because I paid in excess of what I got, I am recognizing the goodwill. So you will come across what I'm writing now a couple of sessions down the line when you will study consolidation. But let me tell you, Ind AS 103 deals with business combination. When you acquire the assets on a from in a business combination, when you acquire a business, okay, typically the takeover entry that will be passed is assets at fair value debit to liabilities taken over again at fair value, and you will be making the payment. So let us assume you do a full cash payment. This will be your purchase consideration, and the resulting figure is going to be your goodwill. You remember this entry somewhere in your life?
Yes, sir.
ये आपने commonly सीखा होगा when you were doing AS 14 also, accounting for amalgamations, right?
Yes, sir.
Okay. Now जरा ध्यान से सुनो. This goodwill in your accounting language or financial reporting, it is having this particular value. Okay. But for tax purposes, will the tax department allow you this goodwill?
No, sir.
नहीं होता है भाई. टैक्स डिपार्टमेंट को समझ में ही नहीं आता है ये गुडविल क्या है. सो फॉर टैक्स पर्पसेस दिस वैल्यू ऑफ द गुडविल विल ऑलवेज बी 0. यस.
Yes, sir.
So what is happening? Carrying amount is greater than tax base of an asset. So what should you recognize?
DTL.
DTL. ठीक है. तो सर हमने तो पढ़ा था कि हमें DTL recognize करना है, तो हम DTL recognize करेंगे. To DTL. मैंने DTL recognize किया. Then what is going to happen? This goodwill will again increase. Yes. If this goodwill again increases, फिर से my DTL will go up. Yes.
Yes, sir.
And then this will again go up. And this things will go on continuing because it results in a circular reference, right? मैं goodwill पे I recognize a DTL. That DTL will increase the goodwill. That goodwill will again give rise to a DTL. That DTL will again give rise to the goodwill, and this is a never-ending cycle. Okay, so it gives rise to what we call a circular reference. You have seen that in your Excel and all when you do a formula that includes the cell which is in question, then it results into a circular reference. You cannot really come to a conclusion. And therefore, for this anomaly purposes, Ind AS 12 tells us that you are not going to recognize goodwill on its initial recognition. Any doubts in this? Yes? Clear? Pooja, Shabbir, Usha, all clear? Hemant?
Sir.
Yes?
Yes, sir.
Okay. All right. Now, obviously, on initial recognition, if I did not recognize the DTL, then any other items relating to this goodwill, like for example, impairment loss, will I recognize it? Answer is no. कैसे recognize करेंगे सर? ये goodwill तो हमने recognize ही नहीं किया, तो उसका impairment का tax treatment how can I recognize? I can recognize an impairment related goodwill if I have recognized the asset related goodwill in the first place. When that is not there, then I cannot recognize this also. So therefore, this case also, I will not recognize the DTA, DTL. But if the tax department helps you to recognize the goodwill and it is not arising from initial recognition, it is not arising from initial recognition, in that case, you can recognize the DTL. In that case, you will recognize the DTL. Okay, we'll look at the cases where this is going to come, but is it okay so far? Yes, is it okay? Any
Yes.
doubts here? No doubts. Okay, so let us proceed further then. An entity acquires a subsidiary and pays rupees 1 lakh. The fair value of the net identifiable assets is is 65,000. Tax rate is 30%. How should the entity deal with the taxable temporary difference arising on initial recognition of goodwill in a business combination in a tax jurisdiction where such goodwill is not tax deductible? Bolo, tell me. Will I recognize the goodwill?
Yes, sir. If not, आप last point जो अभी slide में last में cover हुआ था
हाँ
कि
वही
जब
है
tax
नहीं,
application नहीं है तो goodwill recognize करेंगे and then DTL recognize करेंगे.
ये नहीं करेंगे where such goodwill is not tax deductible. So you will not recognize because goodwill does not have a tax base.
No tax base.
No tax base. That's right. That's right. So circular reference होगा, Monica, what I just now explained to you. The
Okay.
essential case will be like this. Net assets debit 1 lakh to bank 65,000. Goodwill 1 minute. Sorry, opposite. My mistake. Net assets 65,000. Paid is 1 lakh. 35,000 is your goodwill. On this goodwill is not tax deductible. So you are not going to get any deduction for this goodwill under tax purposes. So its tax base is 0. So accounting base is 35, tax base is 0. The difference is giving rise to a DTL, but it results in a circular reference again and again. And therefore, no need to do any recognition of goodwill. No need to do any recognition of goodwill. Okay.
Okay, sir.
Therefore, what are you going to do? You will not recognize. Okay. All right.
Yes, sir.
Do not recognize DTL. Do not recognize DTL. Okay. Now, after 2 years, the goodwill computed, this goodwill of 35,000 is tested for impairment and the entity recognizes an impairment loss of 10,000 for it. What is the treatment of the amount of taxable temporary difference in this case? No change. I did not book that 35,000 goodwill I did not recognize the detail for the goodwill of 35,000. When 35 becomes 25 because of impairment, why should I then do anything for tax purposes? I will not do anything for tax purposes. Is it okay? Yes?
Yes, sir.
Yes, sir.
Yes, sir.
All right. Now we move on to another question. A Limited acquired B Limited. The following assets and liabilities are acquired in a business combination. Fair value, carrying amount, temporary difference is given to you. Plant and equipment, inventory, debtors, 9% debentures. Consideration paid is 500, giving rise to the goodwill, which is there, it is appearing. Okay. So now the question is calculate the deferred tax, whatever it is, asset or liability, जो भी है. Okay. So can we do it quickly? Yes. Can we do this quickly? This is question number. Okay. Question number 5. ठीक है. One thing you will have to understand, okay, and you will be studying this. As of now, you would not have studied. Whenever I do a business combination, I will always do a fair valuation of my assets and liabilities taken over. Always. See, there is an importance to fair value, which is given under the Ind AS regime, so much so that it borders on the value of, or it borders to the extent of, I have to get things at fair value. That is the kind of, what you can say, the kind of thought process that is ingrained by the standard setters. I need to get things in line, okay, at fair value. You people would have studied your partnership accounts, and in your partnership accounts, you would have studied goodwill, जिसके लिए you have multiple methods of valuation. सीखा होगा ना, super profits method, capitalization of profits method, annuity method. You remember these methods of valuation of goodwill?
Yes,
Yes,
sir.
sir.
Yes. Okay. These methods of valuation of goodwill, do you really think they are fair values? Today, now you are at a more mature level. Can you tell me whether it really is mature? Is it really fair value, or it is only based on certain estimates of future profitability?
Estimates.
Estimates,
It
sir.
is highly based on future estimates, and future estimates are fair. कितने लोग बोल सकते हैं ये? जिसको, who wants to show goodwill, he will show a very high super profit in the future, and then we will say that I need my purchase of the 5 years of super profits, and he will take a high amount of goodwill. So that those assumptions of future profits are fair comes with a very, very high caveat of management assumptions, or what we call as management bias. And therefore, what the standard setters here have done is, they are very clear that goodwill should come at fair value. And this method of calculating the goodwill is not fair, so to speak. So what they say is, all right, I cannot compute goodwill's fair value today using non-conventional methods, okay, like super profits or annuity method or capitalization of profits or purchase of simple profits, जो भी है, I cannot do that. I cannot call it as fair. And therefore, what we will do is, look at this. You will be studying this again, I repeat, in your business combinations. But when you look at this entry, if my assets are at fair value, my liabilities are at fair value, and if I am able to build my purchase consideration also at fair value, can I then say that goodwill will automatically fall in place at fair value?
Yes, sir.
ये फेयर है, ये फेयर है, ये फेयर है. There is only one thing which you have to balance it out, and that is your goodwill. That is your goodwill. And therefore, when I get everything at fair value, it is the goodwill that automatically comes in at fair value. And then we as accountants, we will pride ourselves and say that what an achievement. We got fair value of assets, we got fair value of liabilities, we got fair value of purchase consideration. So therefore, our goodwill that is now coming in as a balancing figure is bound to be at fair value. That is obviously the mathematical deduction out of this logic that we have. Is it okay? So always I will have in a business combination purchase consideration, net assets taken over, always appearing at fair value. Now, in this particular question, I am given fair value, I am given carrying amount. Where is tax base? They want you to calculate deferred tax, asset or your liability, whatever it is, they want you to calculate your tax base, your deferred tax, asset or liability. For deferred tax, asset or liability, you need another column, right? That is your tax base. Where is the tax base in this?
The carrying amount.
Yes, that is the underlying presumption. Okay, that is the underlying presumption in such questions, that the tax base equals the carrying amount. Okay, you have to presume this, and it is quite logical also, because in most of the cases, tax department never allows a fair valuation. So therefore, your carrying amount itself, which is the historical cost, is generally what is permitted for tax also. And therefore, the carrying amount equals the tax base. And then when you're comparing the fair value and the carrying amount, you are essentially comparing the revised carrying amount and the tax base. Are we able to understand? Yes, are we able to follow?
Yes, sir.
Sure?
Yes,
Yes,
sir.
Okay, fine. So now let us come on to the next part.
सर
बोलिए.
एक्चुअली अभी तक हमने जितने भी स्टैंडर्ड यानी अकाउंटिंग इंड एस किए हैं वो सभी यानी फेयर वैल्यू बेस्ड हैं. तो यानी हर एक का जो कैलकुलेशन है वो फेयर वैल्यू के ऊपर हो रहा है, लेकिन हमारा जो इंड एस 113 है वो अभी तक कवर नहीं किया गया है, तो यानी पहले उसको कवर नहीं करना चाहिए था.
See, 113 जो है, I think, yeah, that's what I think.
फेयर वैल्यू
Tomorrow
मेजरमेंट.
onwards, tomorrow onwards, I will be covering Ind AS 33 with you. Then I will be coming to Ind AS 113 only. That is fair value measurement.
ओके सर,
Just
हमारे पास शेड्यूल नहीं है अभी अपडेट.
हाँ, I know. I also I have the schedule with me. ठीक है.
ओके.
So the fair value measurement का जो standard है, you people have been studying fair value, fair value, fair value everywhere. But
यस.
what is fair value? Definitely. Okay. But what happens is now you will be in a more comfortable position to understand कि fair value, where all it gets its implications. See,
यस.
the whole point is the standards are very much interconnected with each other. Today, if I do fair value in the first class,
यस सर.
then you will not be able to understand the implications. If you look at the way the standards are framed, IFRS 1 or Ind AS 101 is the first standard, because that is first time adoption of Ind AS. But
यस सर.
हम first time adoption कब करते हैं? हम लास्ट में पढ़ते हैं. सारे
यस.
इंडेस करने के बाद we take it in the end, because only then you can understand that my uh, earlier regime and Ind AS regime के बीच में जो differences है, how do I iron those differences out when I'm doing a first time adoption of Ind AS? So therefore, in spite of the best way the schedules are put in, we still come out with this problem. Like many times in the previous batches, what we used to do was, पहले consolidation would come,
अच्छा.
then we would have Ind AS 12, and then we would have Ind AS 21. So many times the flow would happen like this. But here also we would have certain technical issues. Okay. Here also we would have certain technical issues because when we do consolidation, we would expect financial instruments application also is coming there. We would have Ind AS 16 applications also coming there. So then all these things put together. So somewhere some nitty-gritty, some things, interconnections will always be left out. So that we will be handling it as and when the topics get covered. Okay. So anyways, coming to this question. Yeah. So the takeover of the asset happens at which value? It will always happen at fair value. It will always happen at fair value. Okay. Now, what is the fair value of your assets taken over? What is the fair value of your assets taken over? 470.
57.
470, na?
470.
Correct?
470.
Yes, sir.
And the carrying amount is how much?
495.
495.
495. So, carrying amount of net assets 470, tax base of
495.
495.
DTA.
So therefore, DTA will be recognized. What will be the DTA to be recognized?
25.
25 is the amount into the tax
Into
rate.
30%.
Tax rate is
30%.
not given, so assume tax rate 30%. Okay, into 30%. So that is equal to
7.5.
7.5. So when I pass my takeover entry, it will be PPE account debit 250, inventory debit 120, debtors debit 200, DTA debit 7,500 to 9% debentures 100 to bank 500. So what will be your goodwill value? 600 minus 200 minus 250 minus 120 minus 7.5. So that comes to how much?
22.5.
22.5. That comes to 22.5. Any doubts here?
No doubt, sir.
Kishore, Hemant, Niranjan, Nisha, Pooja, Shabbir, Usha, all clear? Mamta?
Yes, sir.
Okay, perfect. So that is done. Okay. Now, similar question from your RTP. On 1st Jan, H acquired 100% share capital of S for rupees 15 lakhs. The book values and the fair values of the identifiable assets and liabilities of entity S at the date of acquisition are set out below together with their tax basis in entity S's tax jurisdictions. Any goodwill arising on acquisition is not deductible for tax purposes. The tax rates in entity H and entity S's jurisdictions are 30% and 40% respectively. You have land and buildings, property, plant, equipment, inventory, accounts receivable, cash and cash equivalents, accounts payable, retirement benefit obligations. You are required to calculate the deferred tax arising on acquisition of NTTS and also calculate the goodwill arising on acquisition. Okay. All right. So tell me, for takeover entry, which values are you going to consider?
Fair value.
Fair values. That
Fair
is
value.
this column, right? Fair values. So you are going to take the assets at their fair values, right? 700, 270, 80, 150, 130. Is that right? Yes. And 160. And you have your retirement obligations. So that gives you 1070 worth of net assets before any deferred tax implications. Now, I will compare it with carrying amount or tax base. Previous question, I compared with carrying amount because tax base was not given. Here, this fair value is now my book value because I'm taking over the assets at fair value. But what am I going to compare it for deferred tax purposes?
Tax base.
Tax base. Here you are given a separate tax base. So please don't now unnecessarily say I'll assume book value equals tax base. Diya hai tax base. Alag se. So we will measure this with the tax base. So I have measured this with the tax base of 920. Okay, so net assets carrying amount is
DTL.
1070, tax basis 920. So this is more. So this gives rise to a DTL. This gives rise to a DTL. Now the question is, what tax rate are you going to use? Sir, दो tax rate दिए यहाँ पे. पहले क्वेश्चन में एक भी नहीं था. यहाँ पे सब कुछ एक्स्ट्रा दिया है. बुक वैल्यू भी दिया, टैक्स बेस भी दिया, टैक्स रेट भी दो दिया, one of H, one of S. So what is the tax rate you are going to use?
Sir, H.
H का टैक्स रेट लोगे या S का टैक्स रेट लोगे?
H.
Yes, because the tax base is calculated when you're looking at the book value, it will be in the SS rates.
Yes.
So I think so. It is yes.
Yes, sir. Okay. All right. Last time I had not left you guys. You had given me the answer. Last time I had asked you a question. What is the tax rate I should use for my deferred tax? Should I use the current tax rate or should I use the future tax rate?
Future tax rate.
And everybody had said future tax rate, which was right, which is right, no doubt about it. Now, suppose we will give certain geographical locations to these entities H and S. H is based in India and S is a subsidiary based in the United Kingdom. The tax rates in India is, of course, let us say 25%, whereas the tax rate in UK is, let us assume 40%. Okay, let us assume it is 40%. These assets of the subsidiary are situated in UK itself because the subsidiary is in UK. So now you put your thoughts and tell me whose tax rate are you going to use for calculating the deferred tax? Will you calculate using my rate sitting in India, or will you calculate using the rates of UK because the assets are actually stationed in the UK? Come on.
Sir, UK, because there is a transaction happened like sale and purchase of the subsidiary, right?
Sale purchase तो मैंने यहाँ किया. I purchased the subsidiary sitting in India. But tell me one thing, the tax base of that entity, where will it be recovered? See, what is the tax base?
Yeah. Sir, India.
अभी तक हमने इतना पढ़ा है tax base. What is your tax base? It is basically for an asset, the amount of asset which you are going to expense out in the future against any taxable profits that are getting generated. Yes or no?
Yes, sir.
So these assets of the UK based entity, where are they going to be utilized? They will be utilized in UK. So they will generate profits in UK, and in the future, this asset will be expensed out against those profits which come in the UK. So which tax is going to get saved because of this asset? Is it my tax or is it UK's tax?
UK's tax.
So
Tax.
whose tax rate will you apply?
UK tax.
UK.
Yes.
So when I look at an entity's consolidation or business combination, for the assets pertaining to a subsidiary which is in a different jurisdictional location, we will use the tax rate of the entity which is stationed in that particular geographical location. Is it okay?
Yes, sir.
Yes. All right. निशा क्लियर, पूजा ने तो हाँ बोल दिया, शब्बीर, हेमंत,
Yes, sir.
Yes.
all right. Now let me go one step further. Here I got a DTL. I got a DTL, right? Yeah, because it is somewhere I wrote that. Okay, yeah. So this gives rise to a DTL. 150 into 40%. So that gives you how much? 60, right? That gives you 60. Is it okay? ठीक है?
Yes, sir.
है ना? ये सही है. मतलब I'm not asking, I'm just telling that this is what will be your DTL of 60. Okay. Now let us go one step further. Let us go one step further. Suppose now I got a DTL of 60. Here I got, suppose in respect of the Indian's parent, I have a DTA of 20. So when I do my consolidation, will I offset 60 against my 20 of DTA and present a net DTL of 40?
I don't think so, sir, because different rates.
India DTA 20, UK DTL 60. In your consolidated financial statements, the question is, will I show DTA 20, DTL 60 separately, or will I show net DTL 40? What do you think?
Separate.
Separate.
Separately.
Separate. Reason?
Different tax rates.
Different tax rate, different benefit.
Entity.
Entity.
Entity where this assets and liabilities are lying
Yes.
are altogether different.
तो उसको हम क्या बोलेंगे? There is
Tax.
no legal enforceability for offsetting the taxes there against the taxes in India. These are two different jurisdictions. And therefore, the DTA that is arising here cannot be offset against the DTL that is arising in the United Kingdom. They will be presented separately in your financials. DTA bhi hoga, DTL bhi hoga. Yes? And there is nothing abnormal about it. Is it okay? Yes. All clear? Any doubts?
Yes.
No doubts.
No, sir.
So, purchase consideration. Okay, so coming back to this question, what is your purchase consideration? 1,500. In lakh, this is 15 lakhs. So, in thousands, it comes to 1,500. Okay. So, 1,500 is your purchase consideration. Your net assets, what you have taken is 1,070 minus the DTL of 60, which we just now calculated, 1,010. So the goodwill arising on combination is 490,000 or 4,90,000. Is it okay? Yes. Is
Yes,
it
sir.
fine? So this is also nothing but illustration 10 of your study module. Okay. This is an RTP question, but this is nothing but illustration 10 of your study module. Okay. So that takes care of this question.
Sir, I think it's a TYK question number 10.
Sorry, yeah, TYK question. My mistake. Illustration 10. TYK question 10. That's right. TYK question 10 of study module. Okay. All right. So then let us move on to the next one. Okay. Now you will be able to understand because we have done quite a number of discussion. We have had a little bit of discussion. So A temporary difference may arise on initial recognition of an asset or liability. Example, if part or all of the cost of an asset will not be deductible for tax purposes. Okay. This is one of the case. Treatment will be depending on the nature of transaction that led to the initial recognition of asset or liability, we will recognize the DTA or DTL. So let us look at the cases. In a business combination, typically assets and liabilities are acquired at fair values, but the tax base is not affected or they are affected differently. Here we saw two questions. Fair value is different, tax base is different. Did you see that in both the questions? Yes. Do I recognize the DTA or DTL in respect of this change in fair value and tax base? Bolo. Do I recognize the DTA or DTL? Bolo,
Yes, sir.
yeah. The difference between the fair value and the tax base in respect of a business combination, am I recognizing the DTA, DTL in respect of that?
Yes, sir.
Yes,
Yes, sir.
Yes, sir.
I did recognize, right? 60 is what you saw in the last question, and before that 7,500. Yes or no? ये
Yes,
वाला
sir.
हमने DTA recognize किया था. Yes. So that is the first takeaway. All right. So we do recognize the DTA or DTL. And is it affecting your goodwill or bargain purchase gain? Answer is yes. Sir, kaise? Sir, if I did not recognize this 7,500, your goodwill would be 30. Yes or no?
Yes, sir.
So because I recognized a DTA or a DTL, the only thing which is getting modified is the goodwill. Is it okay?
Yes.
Yes.
Yes, sir.
Nisha cleared? Shabir, Usha,
Yes.
all clear? Hemant?
Yes.
Yes. All right, fine. So it is impacting my goodwill. It is affecting my goodwill. Okay. So that is the next takeaway. This affects goodwill or bargain purchase gain. Bargain purchase gain is opposite of goodwill, where you are making a profit by purchasing more by paying less for something that is worth more. Okay. In your AS21, you used to take that to capital reserve. You used
Capital
to
Capital
reserve.
reserve.
capital reserve. Okay. You remember that, right?
Yes, sir.
Okay.
Yes,
Fine.
sir.
So यहाँ पे we call that as bargain purchase gain. Okay. All right. If the transaction affects either accounting profit or taxable profit, recognize the DTA, DTL and corresponding incomes or expenses in the profit or loss. तो वो हमने किया है. If there is any transaction that is not falling in A or B above, like for example, purchase of asset or receipt of government grants, DTL or DTA is not recognized and subsequent changes as the asset is depreciated is also not recognized. We have seen A, we have seen B, we are yet to see an example of C. C part, let us look at this particular case. Okay. What do they mean by that? Entity A acquires a foreign made vehicle for 1 lakh directly from the vehicle manufacturer. The transaction is not a part of any business combination. The tax laws do not permit any depreciation thereon. Also, any profits at the time of sale are not taxable, neither are the losses tax deductible. Assume the tax rate to be 30%. Explain whether a DTA or a DTL can be recognized in this particular case. Can you recognize? Yes.
Yes, sir.
The tax base, sir.
See, 1 lakh is there. You have purchased it directly from the vehicle manufacturer. Okay. So books mein to vehicle has come in at 1 lakh rupees. In your tax books also, you have purchased this asset. But tomorrow, can I depreciate this asset for tax purposes?
No.
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 Tomorrow, when I sell this vehicle, are the proceeds taxable if I make a profit?
Yes.
No.
No, sir. No.
Profits at the
No
time
loss.
of sale are not taxable.
Okay,
Okay.
sir. Yes.
Losses are also not tax deductible. तो मेरे को एक बात बताओ, having this asset, is it making any impact on your tax?
No, sir.
It is like saying you have Reliance, right? Reliance is held by its by the family, and they have certain personal assets of their own. They have certain personal assets of their own. Having those personal assets, will it impact in any manner the transactions of Reliance? It won't. It really won't. So in a similar case, suppose these personal assets were paid for by Reliance. They are sitting in Reliance Limited's balance sheet because Reliance paid for them. But tax department says these are not used for the business. These are used for the family requirements. And therefore, I cannot give you a deduction. So today, those assets, will they really have any tax implications in Reliance Limited's tax records?
No, sir.
No.
They won't.
No
They
tax
won't.
base.
Tomorrow, whatever you want to do, you can do with those assets. The tax department will say, you go to depreciate, the tax will say, I cannot allow depreciation. These are not used for business. So taxman will say, not allowed. Acha, when Reliance wants to sell and you make a very high profit, tax department will say, मैंने आपको कोई benefit दिया ही नहीं था, so I will not come and collect tax on this. Okay, so this difference that is now arising between a tax base and the value of the asset, the carrying amount of the asset or the liability, this difference, can it at any point of time become zero? See, tax base, carrying amount, ultimately, why deferred tax arises? Because there is a different value to the tax base, there is a different value to the carrying amount. At the end, all of them will converge to a single value. It is only a matter of time. It is only a matter of time. Yes or no? Assets.
Yes, sir.
They
Yes,
have
sir.
a different depreciation rate for tax, different depreciation rate for books, but in the end, they will all become zero. Same goes for liabilities also. Yes or no?
Yes, sir.
Yes, sir.
So that is the fundamental premise of deferred tax. But in this particular case, ठीक है, there is this asset, but is it having any tax implication? Sir, है ही नहीं वो. It is as if that asset is non-existent in tax records. And therefore, this common meeting point will never come for this asset. ये अपने हिसाब से चलता जाएगा. हमें कुछ लेना देना ही नहीं है सर आपके साथ, हम तो कुछ करेंगे नहीं इस एसेट का. So there is nothing which is happening. They are in fact both of them parallel lines. Both of them are parallel lines with no common meeting point. And therefore, when there is no common meeting point, there is no point in recognizing a DTA or a DTL, because you will never go ahead and get any tax benefit or tax payment in respect of this asset or liability. Are we able to understand? Yes?
Yes, sir.
Yes, sir.
That
Sir,
is,
in
yes.
this case, अगर ये line नहीं लिखी होती है, sales are not taxable because short term, we know the short term capital gain is applicable on motor vehicles, right? तो अगर ये line नहीं होती तो हम assume करके 30% charge करके DTA create करते, right?
नहीं, आप सबसे पहले आप ये क्यों अज्यूम कर रहे हो कि एसेट सेल इज अ शॉर्ट टर्म कैपिटल गेन?
सर कहीं तो ये जाके फिर सेटलमेंट होगा, अगर ये लाइन नहीं होती तो फिर किसी पॉइंट पे तो ये लोग
आप फिलहाल you gave a statement that ये short term capital gain होगी. I want to know the thought process behind that statement.
सर
I
क्योंकि
know
आज
you are coming from a thought process. I want to know that thought process because it is a depreciable asset and
नो
because depreciable assets are subjected to short term capital gain. Is that
यस
your thought process? यही है
यस
ना?
सर यस सर
मैंने ये चैप्टर के स्टार्टिंग में कहा था आप प्लीज इनकम टैक्स एक्ट 1961 को साइड में उठा करके रख दीजिए. उसका इस स्टैंडर्ड के साथ कोई संबंध नहीं है. अगर कोई संबंध है तो इसे मात्र एक संयोग कहा जाएगा. यस,
ओके सर ठीक है
इट इज जस्ट a coincidence if there is a relation. See, IAS 12, Ind AS 12 do not have any relationship with the Income Tax Act 1961, specifically the Indian Income Tax Act 1961. That is why the questions which I gave you to solve, question 1, question 4, the homework questions, I told you specifically don't bother about Income Tax Act because you will find very different tax treatments in the Ind AS 12 questions.
सर
And
उसमें पीपी था ओनली ना इसमें पीपी को भी तो बाइफरकेट कर दिया इसलिए जस्ट ये थॉट
yes,
आया माइंड
I
में राइट
agree. But my point is, even if this line is not given, you can always mention since this is not depreciated, since depreciation is not allowed for tax purposes, and since the treatment on sale is not given, we can assume that it is not taxable, and therefore no DTA or DTL can be recognized. I mean, let us not, even in your exams, this is very critical. I didn't mean to point out, but it is a natural tendency. I've seen across all the batches. Our students of financial reporting immediately go to link the subjects. They go to link Ind AS 12 with Income Tax Act 1961. वो गलती इस दौर मत करना. Don't do it for your financial reporting paper. Client के लिए करो. Do it for your client once you qualify. Okay. But you will be having a separate tax team which will advise you on that. My only point is, यहाँ पे treat it as a different subject altogether. Tax ना, leave it out of this scope. Okay. When you study tax, please don't take financial reporting over there. वो tax है. Tax has its own set of rules, its own set of regulations. Okay.
ओके सर
ठीक है. All right. So will I recognize DTA, DTL? Answer is no. You will not recognize the DTA or a DTL. Okay. Now let us move on to the next one. Entity X acquired an intangible asset for 10 crores that has a life of 5 years. The asset will be solely recovered through use. No tax deductions can be claimed as the license is amortized or as when the license expires. No tax deductions are available on disposal. Trading profits from using the license will be taxed at 30%. Okay. Explain whether a DTA or a DTL can be recognized. Yes. Is this asset claimable for tax purposes as a deduction?
It's same as the previous question also. So
Same as
no.
the previous question. Exactly the same. वहां पे गाड़ी थी, यहाँ पे license है. बस that's the only difference. Okay, it's exactly the same. So will I recognize DTA, DTL? Answer is no. Okay, next year, your asset will be further depreciated for financial reporting purposes. In spite of that, you will not recognize anything because initial recognition only you did not recognize any DTA or a DTL as the case may be. Is it okay? Yes? Any doubts? No doubts? Shall we proceed further? All clear now? Okay, Fine, Hemant has confirmed. Okay. So let us then proceed. Okay, we have some questions. An entity intends to use an asset which cost rupees 1,000 throughout its useful life of 5 years and then dispose of it for a residual value of nil. The tax rate is 40%. Depreciation of asset is not deductible for tax purposes. Same question like that. Okay, same. So will I recognize a DTA or a DTL? The entity does not recognize resulting DTL and it does not recognize. So will I recognize anything? Answer is no. Okay, some figures are given, but overall answer is the same. Okay, all right. Now, let us look at the next one. An entity received a government grant of 15 lakhs and parked it in deferred income under non-current liabilities. The grant is non-taxable. Can the related DTA be recognized? I'm having an asset, sorry, I'm having a liability. The liability has a carrying value. Tax base is zero because it has no tax implication. So it gives rise to a DTA. It gives rise to a DTA. Now the question is, as the carrying amount is greater than tax base, it gives rise to a deductible temporary difference. But since it does not affect accounting or taxable profit on initial recognition, it is not a business combination. The related DTA will not be recognized. And even when I book this income in my P&L on a deferred basis, the related income will not be recognized as it would be, the related income deferred tax would not be recognized as it would be pursuant to initial recognition. Are you able to understand? Yes. Are you able to follow?
Yes, sir.
Okay, fine. So this is the next one. Okay. An entity set up a factory in a backward area at a cost of 50 lakhs, against which it received a government grant of 10 lakhs. The grant is set off against the property as per Ind AS 20. Can I do that? Yes. Can I set off the grant against the asset and show my asset at a net value of 40? Yes. सब सो गए.
So we're trying to recollect, sir.
We're trying to recollect. सर नहीं पढ़ाया था, अब कैसे जवाब देंगे सर को? Right? We can do it. Okay, we can do it. We can set off. If it is an asset specific grant, I can adjust the grant against the gross value of the asset and report it at a net value. Okay, and shown at rupees 40 lakhs in the books, which is perfectly fine. However, for tax purposes, the same is not deducted and the related tax base is 50 lakhs. Can the related deferred tax asset be recognized? Answer is no. Again, deductible temporary difference, but it is a item of exception and therefore the related DTL will not be recognized even when the asset gets depreciated in the future. Okay, so that takes care of question 8 also. Any doubts? No doubts? Okay, all right. Now I come to another question. This is something which you would not have studied, but I put it here because this is related to Ind AS 32 financial instruments. Read with Ind AS 109. There is a concept of a compound financial instrument. Have you studied compound finance? Have you heard compound financial instrument?
जिसमें दोनों होते हैं इक्विटी एंड डिबेंचर्स.
So that is something like your convertible bonds. Okay, something like your convertible bonds. So those become your what you can say compound financial instruments. Okay. Now, how do we do the treatment of that? How does the deferred tax move? We will look at it with the help of this example. For today's discussion, whatever I am explaining on the financial instruments front, you just say you have understood. I will try to make you understand why. But even if you don't understand it completely today, I'm sure you will understand it by the time you are done with 3 to 4 sections of your financial instruments. तब तक तो तुम्हें ये समझ में आ जाएगा. Okay. Financial instruments is a fairly large topic and this will come in the initial 3-4 sessions में ही ये discussions आ जाएंगे आपके पास. Okay. So by that time you will understand. आज के लिए just try to understand what is the situation. Objective is not to teach you financial instruments today. Objective is to teach you the deferred tax implications. The deferred tax implications. So let us start with question 9. Slater Limited issues 1000 convertible bonds on 1st April X1 at par. Each bond is redeemable in 3 years' time at its par value of 2000 per bond. Alternatively, each bond can be converted at the maturity date into 125. Yes. बताइए. Okay, fine. Into 125 rupee 1 shares. The bonds pay an interest annually in arrears at an interest rate of 6% based on nominal value. This is your coupon. Okay, this is your coupon. The prevailing market interest rate for 3-year bonds that have no right of conversion is 9%. Required, show the presentation of the compound financial instrument in the financial statements at inception. The 3-year discount factors are as shown below. Also discuss the deferred tax implications if, for taxation purposes, the convertible loan has to be recognized at the face value of rupees 20 lakhs. Okay. Tax authorities are very clear. Sir, aapko, what is the amount that you have collected? 1000 into 2000. Yes, 1000 bonds into rupees 2000 per bond. So that becomes 20 lakhs. So did I collect 20 lakhs? Answer is yes. So therefore, the entry that will be passed in the tax records is bank account debit to bonds 20 lakhs. So tax base of the bonds is 20 lakhs. Any doubt here?
No, sir.
No doubt. Let us then proceed further. In days 32, in days 109, what do I need to do? We need to split between the debt and equity component by using the market rate discount factor of 9%. So how do I do this splitting? All of that comes later. Okay. For today, at the time of maturity, 20 lakh will be paid. So 20 lakh into 0.772, this rate. 20 lakh into 0.772, 15 lakh 44,367. And every year you will be paying a coupon of 6%. So 20 lakh into 6% into 2.531. Okay. So that comes to 3,03,755. So the total value of the instrument is 18,48,122. But sir, you have received the bond at rupees 20 lakhs. Yes. So therefore, the difference is nothing but your equity component. The difference is nothing but your equity component. Is it okay? Yes?
Yes.
Yes, sir.
All right. Now, so what are the journal entries that you will pass? First year, bank account debit 20 lakhs to liability 18 lakh 48,122, 1 lakh 51,878 equity. Is it okay? Yes. ठीक है?
Yes, sir.
Now see, why do I call it as an amortized cost? This is the amortization cost table. Opening value 18 lakh 48. Interest at 9%, 1 lakh 66. I'm paying 1 lakh 20,000 interest, a coupon. So closing value is 18 lakh 94,453. Like that, year 2, year 3. At the end of year 3, the value becomes 20 lakhs when you actually go for redemption. If the holder asks for redemption. Is it okay? Yes. So the first part, this up till the carrying amount, is this table clear for you?
Yes, sir.
Yes. All right. Now, your tax base. your tax base is how much?
20 lakh.
20 lakhs. So, can I say I have an opening taxable temporary difference of 1,51,878?
Yes, sir.
Yes, everyone.
Yes, sir.
Don't get confused with this and this. They are the same figures, but for the purpose of Ind AS 12, this equity component itself is becoming a
Temporary difference.
temporary difference. Is it okay?
Yes,
Yes?
sir.
Acha. Is it a taxable temporary difference or a deductible temporary difference?
Taxable temporary difference.
You are convinced on that part, right? Carrying amount, tax base, 18, 48, 122, 20 lakhs. Carrying amount, tax base. Carrying amount is less than the tax base of a liability, and therefore it becomes a DTL. Yes?
Yes, sir.
So this is the reasoning that we have. So with this, let us proceed. 1,51,878. So your opening DTL, the rate is given,
30%.
30% is given.
No, sir. Assume.
Not given. Okay, tax rate, bad, 30%. Okay, so 1,51,878 into 30%. Any doubts so far?
So I'm so sorry I lost you because I had some network.
Okay, I
Can you
just
please
was
repeat? I got
mentioning.
the
Yeah, go ahead, tell me.
until the carrying amount is lesser than the tax base, that is where I left off.
Okay, so that's what. So carrying amount less than the tax base of a liability in this case, because 18,48,000 is a liability and for tax base also pertains to the bond. So this is a liability. So since the carrying amount is less than the tax base, we will be recognizing a DTL. Okay, right? So this becomes a taxable temporary difference. And the opening difference is 1,51,878. Tax rate is not given in the question. It's assumed to be 30%. So 1,51,878 into 30%. So 45,563. Any doubts?
No, sir.
No, clear? Okay. At the end of the year, the closing value is 18,94,453 and the closing value of the loan remains at 20 lakh for tax purposes. So the difference has come down to 1,05,547. So therefore, your deferred tax liability closing is 31,664. Yes? Yes, 1,05,000 into 30% gives you 31,664. Are you able to understand?
Sir, can you repeat it?
Okay. See, example 9. End of year 1. Carrying amount, tax base, bond. The bond will continue to have a tax base of 20 lakhs. There is no change, no difference in this. But your liability from 18 lakhs 48, it has come to 18 lakh 94,453. Yes or no?
Yes, sir.
No, 18 lakh 94,453. So what is your difference? What is your difference? 18 lakh 94 minus 20 lakh.
1,05,500 something to be.
547. 1,05,547. Yes or no?
Yes, sir.
Yes. Again, carrying amount is less, tax base is more. So therefore, the closing DTL will be how much?
30% of 1,05,547.
So that comes to 31,664. Any doubt so far?
No, sir.
So opening liability was 45,563 on initial recognition. That has come down to 31,664. So I'm having a reversal of DTL of 13,899. Are you able to follow?
Yes, sir.
Everyone, Jeannie, Pooja, Usha, Hemant, Niranjan, Shabir, Kishore, everyone able to follow this? Yes. Let's then proceed further. Hemant, are you clear? All right. So what is my journal entry? On initial recognition, I will recognize a deferred tax liability of 45,563. Yes. Is it okay? DTL मैंने book कर दिया. Any doubts till now? No doubts. There is only one point that is a contentious issue, which is, sir, debit kahan jayega? Where will the amount get debited? This won't go to your P&L. This won't go to your P&L. Because if you remember the initial discussion that we had, what did I tell? Any tax will be recognized where the original underlying goes. Most of the part, it goes and sits in the P&L because the original underlying is in the P&L. But in this case, the temporary difference, what you are seeing, has it got anything to do with the P&L?
No, sir.
No, it is, in fact, this difference has moved to equity. This difference has moved to equity. And therefore, the deferred tax liability creation will happen out of equity. Is it okay? Yes?
Yes, sir.
Yes. Jeannie, Nisha, all clear? Yes. Pooja, clear? Usha?
Yes, sir. Yes, sir.
Manta, clear? Okay. Fine. All right. Next, I will recognize my interest expense of 1,66,331. So that is your interest expense, 1,66,331. Interest expenses account debit to liability, 1,66,331. Okay, and that is then moved to the P&L. You are paying off the liability. And finally, you will then reverse the deferred tax. You will then reverse the deferred tax. Yes or no? Sir, why will I reverse the deferred tax? Because you can now see the closing DTL should be 31,664. The closing DTL should be 31,664. What was your opening DTL? 45,663. Are yes or no?
Yes, sir.
Yes. Opening is 45, closing is 31. So therefore the reversal is 13,899. 13,899. Any doubts till now? No doubt. So let us proceed further. DTL reversal. This DTL reversal will happen through the P&L. This DTL reversal will happen through the P&L. This will not be routed through equity. This will not be routed through equity. Is it okay? Is it okay?
Yes, sir.
Now, Why is it not routed through equity? That is because the standard has prescribed. See what is happening. How many of you are finding this very difficult? Be very honest. Be very, very honest with me. How many of you are finding this very technical, this particular example?
Yes, sir.
It's difficult. Okay, fine. Let me try to break down. We will forget the calculations, but let us try to understand. सबसे पहले, did you understand the split between the equity component and the liability component? Yes. Is this part
Yes.
understood? Why
Yes.
it is equity, why liability, I cannot explain right now. But is the calculation mechanism understood?
Yes.
इतना तो समझ में आ गया ना?
Yes, sir.
All right. Now see, I have, logic is very simple. Opening value of liability, or I won't say opening, initial recognition of liability is 18,48,122. Correct? Yes.
Yes.
18
Yes, sir.
48,122. You can see 18,48,122 is getting accrued to 20 lakhs over 3 years. Yes.
Yes, sir.
Now this accrual of 18 lakhs to 20 lakhs is happening through which way? It is happening because of accrual of finance cost. Are yes or no?
Yes, sir.
This finance cost accrual is happening in which part of your financial statements? Is it happening in the P&L? Is it happening in other comprehensive income? Or is it happening in equity?
P&L.
P&L.
It is happening in the P&L. So 18,50,000, sorry, what is that figure here? 18,48,000 is becoming 20 lakhs through the P&L. Yes or no?
Yes, sir.
Now, I'll proceed one step further. Tax base, starting में कितना था?
20 lakhs.
20 lakhs. End में कितना होगा?
20 lakhs.
20 lakhs. So can I say somewhere the path is converging in the future after 3 years? Yes?
Yes, sir.
3 साल के बाद ये भाई साहब चले थे 18,48,000 से, ये 20 लाख से ही चले, 20 लाख remained at 20. Ultimately, at the end of 3 years, both of them are shaking hands when they meet 20 lakh rupees. Yes or no?
Yes, sir.
Yes, sir.
Can I say that this difference of 1,51,878 is becoming zero after 3 years by virtue of the impact being absorbed in the P&L in the financial statements?
Yes.
Yes.
Yes, sir.
So therefore, the deferred tax that I recognized initially, मैंने initially recognize किया था ना 1,51,878 into 30% is 45,663. Yes or no?
Yes, sir.
Ultimately, this is going to become zero at the end of 3 years.
Yes, sir.
This 45,000 till zero का जो सफर है, the journey from 45,000 to zero, from where it should come? Should it come through equity? Should it come through OCI or should it come through P&L?
P&L.
Why through P&L? Because the build-up
Interest.
from 18 to 20 has happened through the P&L.
P&L.
Are you able to understand?
Yes, sir.
Is this okay?
Yes, sir.
Monica, समझ में
Yes.
आता?
Yes, sir.
Pooja, did you follow?
Yes, sir. I was replying.
Acha, Nisha, did you follow? Mamta, Hemant, did you follow?
Yes, sir.
Yes, all right, fine. Acha, but when I initially recognized the deferred tax liability, initial recognition, this 45,663, ये कहाँ से आ गया? Did this
Equity.
come through the P&L? This came through the equity. Why this came through equity? Because the initial difference has been sitting in equity. Yes or no?
Yes,
Yes,
sir.
sir.
तो सर वो equity का क्या करे? It will remain there. It will remain there. There only. Is it okay?
Yes, sir.
So the whole question deals with this. Okay. 18 lakh 48 becoming 20. Interest accruing year on year 99%. I am making a payment of 66%. So closing is this much. So the comparison with the taxable temporary difference closing and the corresponding DTL thereon and the accounting treatment. You can see in all the cases, the scheme of entries remains the same. Interest expense P&L, which is moved to the P&L, liability repayment and deferred tax reversal happening through the P&L. Deferred tax reversal happening through the P&L.
Sir,
Yes.
sir, one question is कि हमने अभी तक completely इक्विटी को हटाया नहीं है, डेबिट नहीं किया, तो
Yes.
रिमेनिंग पोर्शन इक्विटी का रहेगा, राइट?
Yes.
45, 16 एंड 30 कुछ और एक और अमाउंट था, राइट?
1 minute. ये रहा आपके 45,000.
31, राइट? ये तीनों को क्लब करने के बाद में 151 नहीं होता, राइट?
एक मिनट, एक
तो
मिनट, एक मिनट, एक मिनट. आप तीनों कौन से तीनों को क्लब कर रहे हो?
45, 31 और 16.
45,
Opening है.
31 and
16.
इसका please don't get confused. This is taxable temporary difference gross. This is after multiplying the tax rate on that.
Rate
ये
multiplication.
तीनों
सर
कभी
बट एंट्री हम जब करेंगे तो हम एंट्री इसी की करेंगे, इक्विटी टू टीटीएल, राइट?
equity to DTL of 45,563. Yes.
एंड नेक्स्ट ईयर
Only the
इक्विटी
initial recognition.
Wait, 1 minute. 1 minute. Monica, let you complete your question first. Yes.
एंड
बताइए.
नेक्स्ट ईयर इक्विटी टू टीटीएल इज 31,664.
नहीं, नहीं. You will not do that. Okay. Next year, see, that's what I'm saying. Opening DTL 45,663. ठीक है?
यस सर.
Closing DTL year 1 31,664. Okay?
यस सर.
This movement is happening through
P&L.
होने
Yes.
के बाद already my DTL is sitting at 31,664. You don't have to do any separate entry for equity account debit to DTL because जो DTL था at 45, it has already come down to 31,664. Is
सर
it okay?
150 सर 151,875 में से 45 तो लेस होंगे, रिमेनिंग इज इक्विटी रहेगा, राइट?
It will remain like that only.
ओके.
It will
And-
remain like that only. वो change नहीं होगा. Okay?
ओके सर.
Yes. Understood?
यस सर.
अच्छा, Nisha, you can go ahead.
Just wanted to confirm that the equity to detail journal entry would be recorded only in the beginning, only once.
Yes, initial recognition. Only at initial recognition. That's it.
Yes.
Because
Yes, sir.
the temporary difference of 1,51,878 was recorded in equity. Okay, you can see this entry. This is the temporary difference. Where is it booked? It is booked in equity. That is why the related DTL is also booked in equity. Did you follow?
Yes, sir.
सर
And
बट
all the
इसका
reversal will
मतलब
be
हो गया कि हमने इक्विटी से
Wait,
P&L
Monica,
में
रुको, Monica, wait. Nisha, complete.
so all the reversals is only through between the profit and loss account and the DTL.
Yes, because now after initial recognition, what is happening is the build-up from 18 lakh 48 to 20 lakhs is happening through the P&L. Yes,
Yes, sir. Yes, I understood.
that is why you are having, okay, that is why you are having the reversals also happening through the P&L and not through your equity. Is it okay?
Yes, sir. Thank you,
Okay,
sir.
Monica, आप बताइए.
सर इसका मतलब तो ये हुआ कि हमने इक्विटी से P&L में ट्रांसफर कर दिया इनडायरेक्टली, मतलब टैक्स सेट ऑफ हो जाएगा, टैक्स बेस्ड और
That's right.
करंट बुक सेम हो
That's
जाएंगे.
right. You are basically spreading it over the 3-year tenure. Yes. The reversal is getting spread out over a 3-year tenure. Is it okay?
ओके सर.
And that happens through the P&L. Okay?
ओके सर.
All right. I have a question from Vinay. Sir, as per Income Tax Act, the principal amount is not allowed as a deduction and interest portion is allowed. So while computing tax base, how both the elements are considered? Tax base of liability is carrying amount less future deduction of interest in the future, then it would be reduced. Okay. See, let us now understand how the tax authorities have accounted this. Okay. Again, you have also made the same thing as per Income Tax Act 1961. अब जब जब आप लोग इनकम टैक्स एक्ट 1961 का जिक्र करोगे ना, यू हिट योरसेल्फ ऑन योर हेड. ओके, यू आर नॉट सपोज टू मेक रेफरेंस टू इनकम टैक्स एक्ट 1961 हियर. ओके, इनकम टैक्स एक्ट 1961 का बात मत करो. बट एनीवेज यू हैव टेकन अप दिस क्वेश्चन. लेट मी टेल यू, हाउ डू यू थिंक Income Tax Act will account for this? How do you think Income Tax Act will account for this? Income Tax Act will say, sir, I don't know financial instruments. I am a simple Janata common man. For me, you have taken a loan of 20 lakhs. So I will pass the entry, bank account debit to loan 20 lakh rupees. And I will give you an interest deduction of 1,20,000 each year. Yes or no? So
Yes.
whenever I pay interest of 1,20,000, I pay the coupon of 1,20,000. Income Tax Act will give you that deduction of 1,20,000. So that is going on getting allowed to you as a deduction. So in your statement of computation of income, what will actually be happening is you will have net profit as per the profit and loss account, add finance cost in the first year 1,66,331 less coupon paid 1,20,000. So that will be your taxable income. Second year में वैसे ही होगा. Third year also you will have a similar basis. Second year 1,70,000 will be added back. Allowed is 1,20,000. Third year also similar basis you will have the treatment. That is how you are going to record your entries in the tax records. Is it okay? So therefore, in your tax base, I haven't considered 1,51,000 as a deductible amount. What I have told is the tax base is your 20 lakh worth of liability, which is recognized in your tax records. That's it. If you remember in your AS regime also, convertible instruments, how you used to record 9% debentures. Suppose you had this not under Ind AS 109, you had this under accounting standards. You would recognize the bond at 2 lakh rupees, right? And then you would also recognize the interest of 1,20,000. And in the future, if they convert to equity, you will debit the liability and credit the equity. That would be a legal way of doing the accounting. But in reality, what you have issued is an option to the holder of the bond that, look, I'm giving you something that has the features of both equity also and liability also. Depending on what you exercise at the end of third year, I will pass the final settlement entry. But whatever is booked in equity at initial recognition will continue to stay there in equity. Is it okay? Yes, Vinay? Right?
Okay, but sir, what will be the tax base here?
What will be the tax
Tax
base?
base, yeah.
Tax base is 20 lakhs because the tax department recognizes the liability at 20 lakhs. Na?
Okay, but we are computing on the CCDs, convertible bonds.
That is, see, but will tax department understand convertible bonds?
Yeah, right. But as per tax base as India 12, he considered carrying amount less future deduction. So
Okay,
carrying
so
amount is the value of liability, and the
carrying
deduction
amount,
will get from. Hmm.
carrying amount is 18 lakh 48,122,
Right.
and you are saying 20 lakh is your tax base. So now you are saying this difference of 1,51,878 will be allowed in the future as a deduction, correct?
No, I'm talking about 1,20,000 over the 3 years. That is 3,60,000 interest payments.
Correct. So
So I'm talking about we can't reduce 20 lakh minus 3,60,000. So that will be our tax base.
no, you cannot reduce 20 lakh minus 3,60,000 because what you have to compare is, okay, fine. So you are going back to, okay, I will just help you out with that. Okay, give me a minute.
Yeah.
Let me just take you through the very beginning of the discussion yesterday. Okay. Carrying amount initially 18 lakh 48,122. Tax base is what we have mentioned is less amount deductible for tax purposes in respect of that liability. Okay. Okay. So your tax base is going to record it at 20 lakhs. Now, the definition of your tax base of a liability is strictly carrying amount of 18 lakh minus any amount that is deductible for tax purposes in respect of that liability in the future periods, if any, gives you the tax base of the liability. Okay. Revenue received in advance, amount deductible for tax purposes. amount deductible for tax purposes. Okay, fine. Okay, all right. Now let's look at this particular explanation. The total interest that is being charged on this instrument is 5,11,878 over a 3-year period.
Yes.
Yes. Okay. So 5,11,878 is the total interest in line with your Ind AS 109, read with Ind AS 32. But
Right.
out of this 5,11,878, how much of it the income tax department will actually allow you?
360.
Only 3,60,000. Correct? So therefore, can I say that interest of 1,51,878 is not allowed to you forever by the income tax department?
Correct.
Yes.
You will never get this deduction, right?
Yes.
Though you are having the cost sitting in your P&L of 1,51,878 extra, you will never get this deduction. Am I right?
Right.
Right? So therefore, I'm just mapping this to the definition of the tax base that you just now brought up. It is nothing but the carrying amount, which is 18,48,122, less any amounts that are deductible for tax purposes in respect of that liability in the future periods. It is not in fact a deductible. In fact, the income tax is penalizing you by 1,51,000. Yes or no?
Yes.
So therefore, that penalizing of 1,51,878 is resulting in the tax base of 20 lakhs. Are you able to understand now? Yes. Because against a 5,11,000 of interest, when you are getting only a 360, you cannot look at 360 in isolation. You have to look at 360 with reference to the interest which is being levied, which is being charged, or which is being computed in accordance with the financial instruments chapter. Is it okay? Yes. So what is being hit in your P&L is 5,11,000. Income tax is giving you only a 3,60,000. So there is still a gap of 1,51,000 which the tax authorities are not giving you. So that is a deduction which is not allowed. So therefore that is minus 1,51,000, which is therefore making it a tax base of 20 lakhs. Are you able to follow, Vinay?
No, but okay, but last query here, sir. So
Yes.
it mentioned about carrying amount under tax-based definition, not the actual amount of loan here.
So the carrying amount is 18,48,000, right?
Right.
Okay.
What is considered under the amount deductible in the future periods?
Amount deductible in the future periods is actually not deductible in this case, because what is happening is income tax is giving a lower deduction compared to what is hitting your P&L. You are
Yes.
able to follow,
Mm.
right? See, let us move to the next year. Let us move to the next year. What will happen? The carrying amount is moving from 18,48,000 to 18,94,453. Okay.
Mm.
Now, on 18,94,000, do you think the tax department is going to give you this interest deduction of 1,70,000 plus 1,75,000? Answer is no. 1,70,000 plus 1,75,000 is nothing but how much? 3,45,547. Are you able to follow? Yes.
Yes.
But do you get this deduction?
No.
You will get a deduction of how much?
240.
Only 2,40,000. So what is the amount deductible? Sir, deductible is not 2,40,000. There is in fact an additional amount that is being levied by the tax department of 3,45,547 minus 2,40,000. So 1,05,547 is in fact the additional tax that you will have to pay on this amount. Are you able to follow? Yes. In the P&L that you are going to prepare, you will have a hit of, what is that figure? 3 lakh something. But against that, your tax deduction is going to be only 2 lakh 40. So for tax purposes, the amount that will be deductible in the future is in fact an addition that will happen, right? Because you are hitting your P&L by a lower amount, by a higher value, 3,47,000. But tax department will say, I cannot give you a deduction of 3,47,000. I can give you a deduction of only 2,40,000 or whatever it is. So therefore, that 1,05,000 is a negative amount that gets subtracted. In effect, it gets added, and therefore your tax base remains at 20 lakhs. Are you able to follow?
But last year, sir, we can do like this 1,05,000. That will not be allowed. We are reducing that from the actual amount of loan.
That's right. That's right. That is the same way. You can treat it that way also. Okay. This is a very circular and very complicated way of looking at things. That is why I also took some time for me to regroup my thoughts. But I find this approach to be the safest. You will never go wrong in this approach if you understand why this particular amount is sitting as the tax base. All that you have to do is think from the tax department's approach and then do your calculations. Then you are going to get this particular method correct. Is it okay?
Okay, sir.
Yeah.
And
I liked this thought process. Okay. I have taken about 8 to 9 batches. Nobody ever came to me back with this question of interpreting right from the way the standard has come. It's good. Okay. I like your thought process. Okay. All right. Okay, fine. Too much time we have discussed this question. Is it okay? Any doubt so far on this question?
no.
No, sir.
Clear, everyone? Yeah. Slater Limited issues 1,000 convertible bonds. Okay. Assume tax rate to be 30%. Acha. Okay. So ultimately, see, why this question is gaining importance is because of the fact that the initial source for creation of the temporary difference was equity, but the reversal of that is happening through the P&L. So the standard has itself permitted you to give the treatment as the source can sit somewhere else, but as long as the settlement is routed through whichever statement, whether it is equity, whether it is P&L, whether it is OCI, the corresponding deferred tax also will be routed through the same source. Are we able to follow? Yes?
Yes, sir.
Sure. So that is the reason this question is important. So when I look at this particular exception, in accordance with Ind AS 2, the issuer of a compound financial instrument classifies the instrument's liability component as a liability. In our example, 18,48,122, and the equity component as equity. That is 1,51,878. In some jurisdictions, the tax base of the liability component on initial recognition is equal to the initial carrying amount of the sum of the liability and equity components. You see how technical words the standard uses because they have to use such a language. In some jurisdiction, the tax base of the liability component on initial recognition. So tax base is equal to the initial carrying amount 1848,122 is equal to the sum of the liability and equity components. So in our case, did we say that the tax base is 20 lakhs? Yes or no?
Yes, sir.
Yes. So therefore, it is 20 lakh rupees by virtue of this explanation that the standard has given. The resulting taxable temporary difference arises from the initial recognition of the equity component separately from the liability component, which is 1,51,878. समझ में आ गया अपने को? Yes. Did you understand the case?
Yes, sir.
And now we come on to the treatment. The deferred tax is charged directly to the carrying amount of the equity component. This is the initial recognition, 45,663. In accordance with para 58, subsequent changes in the deferred tax liability are recognized in the P&L as deferred tax expense or income. Have you understood this?
Yes.
Yes. Did you understand? Okay. Acha. Again, this question, you will not find it in the study module. You will not find it in RTP. You will not find it in exams also till now. Okay. सलाह के तौर पे फाइनेंशियल इंस्ट्रूमेंट्स आप पढ़ोगे. द मोमेंट यू फिनिश compound financial instruments understanding, please come back to this question and then try to do it. I'm sure you will get this understanding complete. Today, my takeaway from here is you people are about 60% comfortable with the solution. You may not be 100% comfortable. Am I right? Maybe that 40% of discomfort is arising because of the fact that our financial instruments is still pending for learning. Once you learn that, I'm sure this 40% also will go out. Is it okay? Yes.
Yes, sir.
Okay. Vinay, anything you would like to add?
Nothing here.
Okay. All right. So just go through that. I'm sure you will be able to get it correct. Okay. All right. We take a break of 5 minutes. Okay. It's 9:11. We come back in 5 minutes. Okay. All right. We have to hurry up. There is too many things to cover. Okay. All right. A 5-minute break and then we shall come back. Okay. All right. All right. Okay, fine. Let's resume. So coming back to our discussions. Okay. Investments in subsidiaries, branches, associates, as well as interest in joint arrangements. See, these are typically from a consolidated balance sheet perspective. Okay. So the question is, do I recognize any deferred tax on account of investment in subsidiaries, branch, associates, or interest in joint arrangements? Typically, these are having certain uh, what you can say typical adjustments. One is the existence of undistributed profits or foreign exchange rates or any reductions to recoverable amounts. If that is the case, always recognize a DTL. There will be certain restrictions on DTA, but we will see that in step number 6. Okay. Recognize DTL except when you have a control over the timing or non-reversal is probable. Then in that case, you do not recognize a DTL. So what is this? We will see with the help of an example. Okay. All right. This is again picked up from your study module itself. On 1st April 20X1, ABC Limited acquired 100% shares of XYZ Limited for 4,373 crores. By 31st March 20X5, XYZ Limited had made a profit of 5 crores, which remained undistributed. XYZ, that is the subsidiary, made profits of 5 crores. Okay. Now, based on the tax legislation in India, the tax base of the investment in XYZ Limited is its original cost. Assume the dividend distribution tax rate to be 15%. So now, what is happening is I have a parent ABC Limited. ABC has an investment in a subsidiary of 4,373. Is it okay? Now, after it has taken over the subsidiary, there is a further profit of 5 crores. So the value of this investment is 4,378 crores. Do you agree to this? Yes?
Yes, sir.
But the tax base, the investment is only 4,373. Is it okay?
Yes.
So now this difference is giving rise to a difference. This is giving rise to a difference. Now, is this difference temporary or is this difference permanent? Is this difference temporary or permanent? Sir, technically it is temporary because any point of time, the parent will say withdraw that profit and I can pay it somewhere else. Yes or no? So technically speaking, that difference is temporary. That difference is temporary. But is this 5 crores controllable by the parent? Can the parent control the outflow of this 5 crores in the form of dividends?
Yes.
See, 4,373 crores is the cash which I have paid. So in my books, I am having investment in subsidiary appearing at 4,373. Subsidiary after that is having additional profits of 5 crores. So when I consolidate, my consolidated balance sheet, investments will go away. In its place, I will have all assets, all liabilities coming in, and I will have subsidiary profit coming in. What will be the value of that investment plus profit? Can I say it will come to 4,378? Yes.
Yes.
See, investment in subsidiary करके it won't be visible to you. What will be visible to you is assets,
Assets and
parent
liabilities.
plus subsidiary, liabilities, parent plus subsidiary, profits, parent plus subsidiary. All this will be visible to you in the console financials. Yes.
Yes, sir.
So the net value of that, what you are taking from the subsidiary, will be 5 plus what you have already invested. So can I say net your console balance sheet will increase by 5 crores because of the profit the subsidiary has generated?
Yes.
So therefore, your net value or net investment in the subsidiary will be 4,378 crores. Yes, it won't be visible as an investment in subsidiary. It will go in different places: assets, liabilities, reserves, goodwill, capital reserve. यहाँ सब जगह पे बिखर जाएगा. But the sum total of that value will be 4,378. Yes or no?
Yes, sir.
But for tax purposes, the value will remain only 4,373.
373.
So is this giving rise to a temporary difference? Answer is yes. Now the question is, do I recognize this as a temporary difference? This is my question. Answer is, ideally you should, but in this case, I am the parent. I am the parent. Do I have a right on how much I can withdraw from the subsidiary? Can I control whether subsidiary should give me dividend or not? As a parent, can I control on withdrawing that 5 crore of profits made by the subsidiary?
Yes.
Yes. So if I control, okay, if there is no control, I draw that cash comes to me and I can spend it somewhere else. But today, sitting in a position of control, I am in a position to decide whether I need those profits or not. And therefore, ideally, this difference of 4,378 versus 4,373 is within my control to decide whether this difference is temporary or whether it is going to remain permanent. The parent may say to the subsidiary, I need the money, please initiate the transfer to me immediately. And once the transfer comes in, I can spend it somewhere else and I will come back to 4,373. In which case, the difference will not be there. Otherwise, I can tell, keep 5 crore to yourself, my net worth will be 4,378. My point of contention is this difference of 4,378 versus 4,373. Whether I want to keep the difference or I want to nullify the difference, both of these things are within the control of the entity, are within the control of the entity, of the parent entity.
Parent entity.
Are you able to follow? Yes.
Yes,
Yes.
sir.
Because this is within the control of the parent entity, you will not be recognizing the temporary difference. It's not required for you to recognize. Is it okay?
Yes.
Because वो मेरे हिसाब से चलेगा. I will be the one to decide whether I want to draw the profits and utilize it, or whether I want to keep it there or do whatever else, whatever be the situation. Is it okay? Yeah. So therefore, there will not be any need for me to recognize the temporary differences. Okay. So as the parent controls the dividend policy of the subsidiary, it is able to control the timing of reversal of temporary differences. So basically, parent will say, today I want dividend, tomorrow I want, or after 10 years I want. So the timing can be controlled by the parent. So when the parent has determined that those profits will not be distributed in the future, then the parent does not recognize a deferred tax liability. The same consideration applies to investment in branches. Investment in branch for me will be an item sitting in my balance sheet. Okay. And that I will add the profits generated by the branch at the end of the year to give you the total value of the investment in the branch. For the tax authorities, your investment in branch will be the base investment that you have done. And then you are the one who is going to control the movement of the profits. You are the one who is going to control the movement of the profits. And therefore, whether you have to withdraw the profits or leave it at the branch, it's your discretion. It is your discretion. And accordingly, a DTL will not be recognized in this case. Okay. Any doubts? No doubts? All clear? Okay. Fine. Non-monetary assets and liabilities of an entity are measured in functional currency under Ind AS 21. We have studied this. If the entity's profit or loss and hence tax base is determined in a different currency, changes in exchange rate give rise to temporary differences that result in a recognized DTL or DTA. The resulting deferred tax is charged to profit or loss. Okay. Okay, the last one is investment in an associate. Do I control the associate? Associate is where you are having, I think, 20%, 20 to 50%. You can take that as ballpark figures, but normally when you study Ind AS 103 and Ind AS 110, you will see that control has nothing to do with the percentage of stake that you are holding. Ind AS goes beyond the concept of control and beyond the concept of shareholding, and it defines what exactly does it mean to control an entity. So therefore, the consolidation principles in Ind AS 110 are slightly different when it comes to determining who is controlling the particular entity. Now, in the case of an associate, I do not control the entity. Okay, I do not control the entity, and therefore you will recognize a DTL arising out of such investments. You will study this. For associates, we use something known as equity method of accounting, where the investment in associate will be increased by the amount of profit that is attributable to the associate. Okay, so I will, if I have a 20% investment in associate, associate makes 100 crores profit, I will add my investment by 20 crores being the share of profit attributable to me as an investor in the associate. So my investment, if it was 85 crore initially, 85 plus 20, 105 will be my book value, but tax base is going to be only 85 crores. So 105 versus 85 is a temporary difference, which I will recognize in any case because I don't have a control over the profitability or the distribution of the profitability in the case of an associate. Is it okay? Yes?
Yes, sir.
It's exactly opposite of
Subsidiary.
subsidiary. Yes. All right. Fine. Okay. Joint venturer can control the timing of distribution. It is same like subsidiary. DTL is not recognized. DTL is not recognized. Okay. Okay. So that is done. Next. Question 3. ABC acquires 30% of shares in PQR for rupees 1000 crores. By 31st March 20x5, PQR had made profits of 50 crores, which is ABC Limited share. So 50 crore is 30%. Okay. 50 crore is 30%. It would have made more, which remained undistributed. Based on the tax legislation in India, the tax base of the investment in PQR is equal to its original cost. So tax base will be how much? 1000. Carrying amount will be 1050. So this is giving rise to a temporary difference. Carrying amount greater than tax base, it gives rise to a deferred tax liability. Are you able to follow? So
Yes, sir.
50 multiplied by the tax rate will be your deferred tax liability. Okay, so that is done. All right. We now come to a very, very important point in our deferred tax recognition. Okay. Tell me one thing. Your deferred tax, is it uh, is it an entry that is having any cash implications, or is it only a book entry?
A book entry.
It's a book entry. All of you, are you convinced about this?
Yes, sir.
It is only a book entry, nothing else. Okay? Acha. See, we have come across certain tax authorities who don't really, understand this concept of deferred tax asset, deferred tax liabilities and all. End of the day, this is only a book entry. So there is a problem with entries which are only book entries and don't affect cash or fund flow. क्या होता है ना, this becomes notional, and then anything left, right, center that you pass can impact your final net worth, the profitability, and then in the future, if you have to reverse this, the implications will become severe. So one such concept here is recognition of deductible temporary differences. See, a DTL is still conservative, because what does it mean? It means in the future you are having an obligation to pay the tax. Therefore, you recognize a deferred tax liability immediately. Wahan pe don't use your head much. Taxable temporary differences, please go ahead and recognize. But deductible temporary differences, that means a deferred tax asset, means what are you trying to say? Sir, I'm trying to say that in the future, I will have the benefit to utilize this asset in the future. Yes or no? So, can I say that recognizing a deferred tax asset today is nothing but equivalent to recognizing some future benefit today? Yes.
Yes, sir.
So when I'm recognizing something that is there that may arise in the future, do you think it is conservative?
No.
No. So therefore, the standard has put in safeguards or checks in step number 6, where it requires not only assessment, but also reassessment. So the words, and this is exactly what is used in the standard. I'm not making this up. It states assess and also reassess. That means the first year when you recognize, you assess and then recognize. Every year you will have to reassess the DTA that you have recognized, and it is mandatory. Okay, यहाँ पे कोई option नहीं है आपके पास. The initial recognition of DTA can arise either due to deductible temporary differences. We have seen, okay, 43B items. Okay. Today you have not paid, which is why you have disallowed. In future you will pay, and that is why you will allow it. So that is deductible temporary differences. Otherwise, there could be carry forward of unused tax losses. Yes. Can I say that unused tax losses gives rise to a deferred tax asset? Yes.
Yes, sir.
Vinay,
Yes, sir.
Monica, or Jeannie,
Yes, sir.
it is an asset. All of us agree. Okay.
Yes, sir.
Because in future I can set off against the taxable profits, and I can reduce the tax liability in the future. So to that extent, yes, there is a deferred tax asset implication. But question is, today if I have to recognize a DTA on my carry forward of losses, I need to have a strong evidence that I will make a profit in the future. Yes or no?
Yes, sir.
Otherwise, what will happen? Otherwise, the fact is that you will only end up booking an asset which is not going to be realized in the future. That is why strong evidence that future profit may not be available, and hence you restrict the recognition of DTL. So whenever you come across entities with losses, be double careful when you're recognizing a DTL. Any entities which have lot of losses, can you tell? ये जो सब बैठते हैं ना, all your startups, all your startups, 8 year loss, 10 year loss, 15 year losses, हम कभी प्रॉफिट में आएंगे ही नहीं. All these kind of things you are hearing in today's times. Today's times are very interesting because you are having different business models which make losses for so many years. Just now we had this Vistara airline, right? Air Vistara, which merged into Air India. कितने साल, not even 1 year it was profitable. Okay, not even 1 year the airline was profitable at a PBT level. It was always a loss-making airline. एयर इंडिया कितने सालों से चल रहा है, कभी प्रॉफिट नहीं बना रहा है. ओके, सो आई कैन कैरी फॉरवर्ड माय लॉसेस, माय बिजनेस लॉसेस फॉर 8 years. I can carry forward my depreciation losses for an unlimited time. This is under the Indian legislations. But ask yourself the question, will I be able to estimate, or do I have evidence of strong profits in the future? How am I going to project that? Who has seen the future for 8 years? Right? Who has seen the future for 8 years? Nobody. Right? So unless there is a very strong evidence, please refrain from recognizing DTA. I will tell you why people want to book DTA, why entities want to book DTA. One, it reduces the it reduces the loss after tax. The moment you recognize a DTA, DTA is what? The entry will be deferred tax asset account debit. Credit will happen more often than not to the P&L. So when you are crediting the P&L, what is happening? PBT is 100, but your PAT will go up. Okay, so PBT is suppose 100 rupees loss. Your deferred tax credit is say 30, so your PAT is 70. Your profit after tax is 70. That is the loss after tax basically. So now this loss has gone down, as a result of which your net worth also will not go down by 100, it will go down by only 70. So be very careful. Okay, always when you are evaluating DTA on losses, have a strong working of the profits that you are going to generate in the future. Deductible temporary differences. Again, here also you have to check that adequate taxable profit will be available in the future. Hence, a DTA is recognized in the period in which deductible temporary differences arise. And then there are insufficient taxable differences. Okay, there are insufficient taxable differences. Okay, what do you mean? For every DTA that I have today, you should have a DTL in the future. So a DTA now and a DTL in the future will compromise and offset each other in the future. You can recognize the DTA to the extent of DTL that you are recognizing in the future. If adequate DTL opportunities are not there in the future, restrict it to the extent that the entity will have sufficient profit, or tax planning opportunities are available to the entity that will create taxable profit in appropriate periods. Okay, so that is something you can definitely have a look. Okay, so for example, when I say tax planning opportunities, suppose you are currently recognizing interest income on cash basis for tax purposes. Now you move it from tax basis to accrual basis, or from cash basis to accrual basis. So that will increase the profitability in the future, in the near future, because earlier you used to not accrue anything. Now you are going on accruing. So therefore, that is a tax planning opportunity which is increasing your future profit. Therefore, to that extent, you can recognize your deferred tax asset. Are we okay with this? Yes?
Yes, sir.
So now, all right. Entity A has a deductible temporary difference of 1 lakh for the financial year ended 31st March 20X1. It anticipates a future profit of 3 lakhs in the next year, against which the said deductible temporary differences could be set off. The tax rate is 30%. Comment on the manner of utilization. Comment on the manner of utilization. Okay. So now tell me, can I utilize this 1 lakh against future 3 lakhs? Yes.
Yes.
Yes, sir.
Can I utilize? Is it adequate? Is it adequate? Yes, it is
Yes.
more than adequate, and therefore you can go ahead and recognize. You can go ahead and recognize the deferred tax asset. Okay. All right. Fine. Next, existence of taxable temporary differences. The entity at the balance sheet date should see whether there are sufficient taxable temporary differences whose reversal pattern matches with the reversal profile of deductible temporary differences. Okay. So taxable temporary difference, opening is 10, recognized in taxable income is 5, closing is 5. 5, 3 becomes 2. 2 becomes 0. This is how the taxable temporary difference is expected to get utilized. However, your deductible temporary difference, opening is 8, recognized is 4, closing is 4. Opening 4, recognized is 3, 1, 1, 1, 0. So what is the amount that you are going to recognize? What is the amount that you are going to recognize? Look at year 1. Year 1, I have a taxable temporary difference of 5,000 and a deductible temporary difference of 4,000. Can I say that in future there is a liability on 5,000 against which I have an asset of 4,000? Are there adequate taxable differences in the future? Yes or no? Look at this. In the future, I have a taxable difference of 5 and a deductible difference of 4. Can I say that the taxable difference of 5 is adequate for the deductible difference of 4?
Yes, sir.
Yes. So therefore, I will recognize my entire deductible difference of 4,000. Have you understood? Yes.
Yes, sir.
In the second year from now, there is a taxable difference of 3. There is a taxable difference of 3 and a deductible difference of 3 and a deductible difference of 3. Yes. So now tell me, is there adequate taxable difference in the future?
Yes.
There is adequate taxable difference in the future. So how much will I recognize? 3,000.
3,000.
Yes. In the 3 years from now, there is a taxable difference of 2 after 3 years, and that is a deductible temporary difference of 1 after 3 years. Is there adequate taxable difference? Yes.
No, sir.
NIR.
Sir.
Sir, uh, taxable.
I
Yes,
have 2,000 in the future, and here I have only 1,000 in the future. Is this deductible difference equal to or less than the taxable difference?
equal to.
Less now, 1,000 versus 2,000. So 2,000 is what is the taxable difference in the future,
Taxable. Yes,
and
sir.
1,000 is your deductible difference in the future. तो taxable ज्यादा है ना, तो adjustment के बाद भी it continues to remain taxable. Yes or no?
Yes,
Yes,
sir.
sir.
Can I utilize this entirely against the future? Answer is yes. So therefore, what is the deductible temporary difference you will recognize? It is 4,000 plus 3,000 plus 1,000, that is 8,000. Any other difficulties here till now? सब समझ में आ गया?
Yes, sir.
All right. So let us move on to the next one. Let us move on to the next one. Okay. First case, recognized in taxable income, taxable difference is 5, deductible difference is 4 at the end of year 1. Do I have adequate taxable differences for my deductible differences? Year 1 का डेटा देखो. 5 against 4.
Yes.
Yes,
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 sir.
sir.
Do I have adequate difference? Yes. So I can recognize 4,000. In year 2, I have a taxable temporary difference reversal of 3 and a deductible temporary difference reversal of 4. So do I have adequate taxable differences?
Yes, sir.
Hey, what? Yes, I don't have.
Sir.
See, I have
No,
4.
sir.
So I don't have adequate. So I will restrict it to taxable
3,000 only.
3,000.
of 3.
3,000 only.
Yes. Year 2, I don't have any deductible difference. But do I have a taxable difference? Yes. It doesn't really matter. Okay. So what I will recognize, 4,000 plus 3,000 is equal to 7,000.
7,000.
Is it okay?
Yes,
Yes.
sir.
Taxable differences, you have to recognize it entirely. 5,000 plus 3,000 plus 2,000. Deductible difference will be 4,000 plus 3,000. It won't be 4,000 plus 4,000. Is it okay?
Yes, sir.
Yes.
Yes, sir.
That is done. Coming to the next. Okay. All right. Same question. 5434 2000, but they have put in 1 point. Ascertain the DTA that can be recognized if it is given that the entity expects a profit of 750 in year 2. Okay. So first case, here 4,000 I can recognize, same like last. 3,000 I can recognize, 0. So 7,000 I could definitely recognize because this is coming from the taxable temporary differences. Yes or no?
Yes, sir.
Yes, sir.
Additionally, the entity says that it is expecting a profit of 750. Can I say this profit of 750 is something that I can utilize for my deductible differences?
Yes, sir.
Future profit is definitely going to give me a benefit for my deductible differences. So how much can I recognize? You can recognize
4 plus 3 plus 750.
That's right. So total 7,750. Is it okay? Yes.
Yes, sir.
All right. Fine. Let us now come to a question that is there. Let me see if you can do this yourselves. The directors of H wish to recognize a material deferred tax asset in relation to 250 crores of unused trading losses which have accumulated as at 31st March 20X1. H has budgeted profits for rupees 80 crores for the year ended 31st March X2. The directors have forecast that profits will grow by 20% each year thereafter. However, the improvement in trading results may occur after the next couple of years to come at the position of break even. The market is currently depressed. Sales orders are at a lower level for the first quarter of 20X2 than they were for the same period in any of the previous 5 years. H operates under a tax jurisdiction which allows for trading losses to be only carried forward for a maximum of 2 years. Analyze whether a deferred tax asset can be recognized for the year ended 31st March X1. What do you think? Should he recognize the deferred tax asset in respect of the unused trading losses of 250 crores? Yes.
No, he shouldn't recognize.
Should not. Because क्या है? I don't have the order book. Demand is suppressed. Sales orders are at a lower level, and I can carry it forward only for a 2-year tenure. So therefore, I don't see any a strong reason for recognizing a DTA. So therefore, let us not recognize it. Okay. All right. Okay. So do one thing. I will leave this with you for homework. It's just similar to what we have already done. Okay. All right. Fine. And this also, you can do this as homework. No difficulty. Okay. Fine. Availability of tax planning opportunities. So in the case of availability of tax planning opportunities, uh, if that is there, then you can recognize deductible temporary differences. Okay, for once the tax planning opportunities are in place. Okay, so now let us look. An entity has a deductible temporary difference of 50,000. That is a DTA. It has no taxable temporary differences against which it can be offset. The entity is also not anticipating any future profits. However, it can implement a tax planning strategy which can generate profits up to 60,000. The cost of implementing this is 12,000. Tax rate is 30%. Compute the DTA that should be recognized. Is it okay? Yes. So tell me, do you recognize any deferred tax asset? See, future tax planning strategy is giving you a profit of 60,000. Yes or no?
Yes.
And the cost of implementing that is 12,000. So net your income in future will be 48,000. Hai ki nahi? Yes.
Yes.
So therefore, 48,000 multiplied by 30%, is what is the DTA that you can recognize. Is what is the DTA that you can recognize. Is it okay?
Yes, sir.
Yes. All right. And then reassess. I told you it's not only assess, it is also reassess. So reassess unrecognized DTA and review the carrying amount of DTA. If there is any unrecognized DTA, please see if you can recognize it. If there is any carrying amount of DTA, then reduce the carrying amount. If it is no longer probable that sufficient taxable profit will be available to allow the benefit of the part or all of that DTA to be utilized. Okay, so that takes care of this. All right. Determination of tax rate. Which tax rate shall we use? We shall be using the tax rate expected to apply when the asset is realized or liability is settled. So this is based on tax rates that have been substantively enacted by the end of the reporting period. The measurement of DTA DTL shall reflect the tax consequences that would follow from the manner in which the entity expects to recover or settle the carrying amount of its assets and liabilities. Okay, fine. So this you can just read it up. Okay, what rate to do, what rate to fix. Okay, I'll be moving further. Dividends, income taxes are payable to a higher or lower rate if part or all of the net profit or retained earnings is paid out as a dividend to shareholders of the entity. In some jurisdictions, income taxes may be refundable or payable if part or all of the net profit or retained earnings is paid out as a dividend to shareholders of the entity. So current and deferred tax assets and liabilities are measured at the tax rate applicable to undistributed profits. Okay. All right, fine. Nothing major here. But now coming to calculation and recognition of deferred tax, it will be the temporary differences multiplied by the tax rate. Okay. Carrying amount of DTA to be reviewed at the end of each reporting period. Tax rate as applicable in period and expected manner of delivery. Expected manner of recovery or settlement based on laws enacted or substantively enacted. No discounting of deferred tax assets and liabilities. Okay. So that is done. Accounting of deferred tax of an asset is consistent with accounting for that transaction or event. Transactions in the P&L, related tax effects also to recognize in the P&L. transactions outside P&L, related tax effects recognized in OCI, related tax effects recognized in SOC. We saw this SOC just now where you had the particular question that we saw on 1,51,878, the bond question. We took the tax implication to the changes in equity, that is to other equity directly, because the difference got its birth from there, which is why we took it to the equity section and not to the P&L or other comprehensive income. Okay. All right. Carrying amount may change even though there is no change in temporary differences, either because of change in tax rates or tax laws, reassessment of or recoverability of DTAs. Example, change in expected manner of recovery of asset. So this results in deferred tax recognized in P&L unless recognized outside P&L. When an entity pays dividends to its shareholders, it may be required to pay a portion to tax authorities on behalf of the shareholders. Such an amount paid or payable is charged to equity as a part of dividends. Okay. Are we okay till now? Anybody has any doubt so far? These last 4-5 steps are only theory in nature. Nothing much from a explanatory perspective, as you would be seeing already. Any doubt so far?
No.
No, Vinay, Monica, Jeannie, Pooja, Usha, all clear? Okay. All fine. Offsetting. Can I offset current tax? Yes, if it is legally enforceable and you intend to set on net basis. Deferred tax, when current tax can be offset. Legally enforceable, okay, deferred tax when current tax can be offset or it can be netted off if it is by the same tax authority. Okay, so that takes care of this part. Okay. On 1st April, S Limited leased a machine over a 5-year period. The present value of lease liability is 120 crore, discount rate 8%, recognized as lease liability and corresponding ROU asset on the same date. The ROU asset is depreciated under a straight line method over 5 years. Annual lease rentals are 30 crore payable starting 31st March X2. Tax law permits tax deduction on the basis of rent payment. Assuming tax rate of 30%, explain the deferred tax consequences for the above transaction for the year ended 31st March 20 X2. Okay. So if we look at so carrying amount in the balance sheet 120, 5-year depreciation, so therefore 96. Lease liability is 120 crore initial recognition plus what is the discount rate? 8%. So 129.6 and 30 crore is the annual lease rental payable. So 129 minus 30. 99.6. So net amount of ROU asset is net amount of lease liability is 3.6 crores. tax base, temporary difference and deferred tax asset to be recognized. Okay. All right. Perfect. So that is
Sir,
fine. Yes.
sir, in previous lease, this lease liability question, now DT detail has to be separately recognized on ROU and lease liability,
One
right?
second. Okay. Yeah. ROU asset, we have taken it separately. Lease liability. Okay. All right. You are saying it should be recognized separately, right?
Yeah, right.
Okay. And net amount is 3.6. 0.00 crores tax base. Okay. Any reason why you are saying separately?
Because in this 12, the amendments was there relating to this.
In Ind
We have
AS
to
12 or Ind AS 116?
12
Okay.
because we have in education material one question is there which clarifies this.
Okay. You mean to say that it needs to go separately, right?
Completely right.
Yes, yes. That has to be done. Okay.
And
All-
and also, sir, here one query. Tax base of lease liability, how we are computing here?
See, the tax base of lease liability will not be there because lease liability is hitting the P&L for tax purposes, right? So what will
No,
it?
just I'm asking only on the basis of definition
Okay.
again.
Yeah. Hmm. Okay. Very simple. Suppose I have a lease liability with a carrying amount of say 100 crores or whatever 100. Okay.
Hmm.
Now at the end 100 will become zero
Yes,
when the lease tenure is over.
yes, right.
Yes. Now that entire payments of lease that you go on doing, is it allowable as a deduction for your tax purposes?
Yes,
Now this 100 is not going to be a direct reference to this 100. This 100 will happen on account of payment of finance, payment of rent. I'm putting it in quotes because it is actually not rent under financial reporting.
hmm.
Accrual of finance cost and any security deposit that you are having. You have all these various complexities in a lease contract,
Hmm.
but end
Yes,
of the day, the deposit will either come to you or it will be knocked off against your final rent.
right.
So end of the day, आप जहां से शुरू हुए थे वहीं पे खत्म हो गए, which is zero.
Hmm.
You start off with zero, you made some deposit, you started paying rent, you completed paying rent, you adjusted the deposit, you are back to zero. Now, from a tax perspective, the security deposit is only a deposit. Rents will go on getting paid. Rents will go on getting paid, allowed as a deduction. Security deposit, what is there for tax base, will the same amount will come back to you, and therefore there also the amount becomes zero. It is just that you have a lot of incomplexities. You have a lot of complexities in your index. Is it okay?
Hmm. And
Yes.
here, sir, if you can explain like carrying tax base cannot be more than carrying amount here.
Tax base cannot be more than the carrying amount. Okay, in this particular case or in any case?
मतलब particularly firstly in this scenario,
For this scenario,
yeah, in lease liability.
lease liability. Lease liability के case में Ind AS I mean taxation authorities are never going to recognize your lease liability wala concept. They don't
No,
understand. Yeah.
like I'm
So
asking about like lease liability carrying amount, it is present value of the lease rentals.
that's right.
And
That's
actual
right.
lease rental will be higher than the present value.
Actual lease rentals will be higher than the present value. That is also right.
Yeah, so that's what I'm asking about.
See, your actual, so you are saying that we are getting a higher deduction because the lease rentals what we are paying is higher than the interest accruals, right?
Yes.
But again, I'm coming back to that definition where we saw the treatment of lease liabilities. I'm sorry, I'm coming back to the point where we saw that compound financial instrument, right? In the
Yes.
compound financial instrument, the tax benefit that you are getting
Hmm.
was basically that extra interest which was hitting you as a penalty under that compound financial instruments. That is why it became to 20 lakhs. In this case, what is happening is whatever you are going to pay off is ultimately reducing this 100 to 0. Now, when this journey from 100 to 0 is there, this journey from 100 to 0 in your financial, in your reporting regime will have accrual of interest. After accrual of interest, it will have further payment of installments. All these items are not at all recognized in your taxation. Yes or no?
Yes.
But if you do a patient check of each of these items independently, you will then put down that for tax purposes, what you are exactly remitting is going to match this carrying amount. Because see, ultimately what is happening is reporting. We start off with 0. We book a lease liability. That lease liability will gradually taper down and come to 0. Do you agree
Right.
to this?
Right.
Yes.
Right.
Now, my tax authorities, they start with 0 because they don't recognize a lease liability. They
Yes.
neither recognize an ROU asset because there is a
Right.
corresponding ROU asset. तो
Right.
ROU
Right.
asset का amortization भी tax में नहीं मिलेगा.
Correct.
So you can do the working on a net basis to check whether I'm really getting benefited. So there are multiple factors involved. So end में tax was at 0, it will continue to remain at 0. Yes.
Yes.
तो end में क्या होगा? ये सब करने के बाद हो क्या रहा है आपको समझ रहा है? My financial statements which were simple earlier have become very complicated right now. That is
Yes.
what is happening here, right?
Hmm.
पहले
Right.
एक बंदे को आप भाड़ा देते थे, वो सीधा सीधा जाके बैठता था आपके P&L में इन द फॉर्म ऑफ अ रेंटल एक्सपेंस.
Hmm.
नाउ आप क्या बिठा रहे हो? आप असेट बिठा रहे हो, लायबिलिटी बिठा रहे हो, इंटरेस्ट दिखा रहे हो, और जो भाड़ा उसको दे रहे हो, यू आर शोइंग इट एज रीपेमेंट ऑफ अ लायबिलिटी. So
Yes.
there is no limit to this imagination, right? But of course, this has come out with certain deliberations by the standard setters. But my whole point is, today you and I are sitting on this table and discussing because you and I are able to understand this.
Right.
आप किसी टैक्स अथॉरिटी के पास जा करके समझाओ कि लीज लायबिलिटी क्या है, एंड देन डिफर्ड टैक्स, आई मीन व्हाट इज दैट, आरओयू एसेट क्या है, एंड अगर आपको आपकी नानी याद ना आ जाए तो मेरा नाम चेंज कर देना.
Right.
It is very difficult to explain these things to tax authorities. In
Correct.
fact, we have seen cases where when they see deferred tax liability in the balance sheet, demands have come from the department कि ये पैसा दे दो, आपको deferred tax liability दिखा रहे हो. Demands have come from the department for this. आप कैसे समझाओगे ऐसे a normal person that what is deferred tax? That is the complexities that we are dealing with on a day-to-day basis. Okay.
Okay.
Okay. And when we see deferred tax asset, तो हम जाके बोलेंगे अच्छा deferred tax asset भी है, refund दो, तो बोलेंगे सर ये तो सिर्फ book entry है. So you see, even they are comfortably able to play between the things. So it is a challenge definitely, but yeah, end of the day, the whole point is, in this case, we are at the same position. It's just that tax authorities are following, in this case, a relatively straight path, whereas the reporting is taking you through the difficult contours of. There are three things which affect a lease transaction. One is the ROU asset, or booking the asset. उसका initial direct cost भी रहेगा, and then you
Correct.
will have the amortization of that till it becomes 0. Second is you will have the lease liability, उसके ऊपर you will have the finance cost accrual, the repayment, and that becomes zero. Third is the security deposit, which is a financial instrument. Because it is interest free, you will do a fair valuation. On that, you will have an interest implication. Part of it you treat it as a prepaid rent, and that you expense it out on a straight line basis. You see
Correct.
the kind of complexities that we are dealing with when we do a simple rent agreement. Okay, but
Yeah.
ये standard है. आप आगे qualify करोगे, so that is what you are going to deal with. Yes. So welcome to the complexities of financial reporting. Okay. All
Yes.
right. ठीक है, चलो आगे बढ़ते हैं. Right. Good. Where were you all this time? You were a quiet observer, I think. Okay. All right. Fine. ठीक है. Now, in business combination, we have seen this already. Okay. Temporary differences arising in a business combination because identifiable assets or liabilities are recognized at their fair values, and tax basis of such identifiable assets and liabilities are not affected or are affected differently. So what is happening? We have already seen, we have recognized the deferred tax liabilities or deferred tax asset, as the case may be. We saw the questions also. In one case, we had 7,500 deferred tax asset. In another case, we had 60,000 ka deferred tax liability. And we did the business combination treatment according to that. Okay. So this is done. Entity does not recognize DTL arising from initial recognition of goodwill. We have seen this. DTA, DTL recognized at the acquisition date. We saw this. It affects amount of goodwill or bargain purchase gain. We saw first example, 30,000 was the goodwill. Because of the DT of 7,500, the goodwill came down to 22,500. DTA shall be recognized to the extent they meet the recognition criteria in para 24, which is basically that existence of temporary differences, etc., जो भी है. Okay. Carrying amount of, so this is temporary differences. All right. ठीक है. Carrying amount of goodwill arising in a business combination is less than its tax base. This is in the case goodwill is recognizable for tax purposes. Okay. The difference gives rise to a DTA recognized for a business combination to the extent it is probable that taxable profit will be available against which the deductible temporary difference could be utilized. So this is something where the tax authorities are allowing you to recognize the goodwill. See, the standard, I told you, it has nothing to do with Indian tax regulations. There are certain regimes outside India where goodwill is genuinely permitted to be recognized by tax authorities. Although, as I already said, goodwill as of now is again a very contentious issue, because in reality, when you are doing everything at fair valuation, net assets at fair valuation, purchase consideration at fair valuation. See, assets account debit, fair value, to liabilities, fair value, to purchase consideration, which is usually through the bank. This is also at fair value. Sir, agar everything fair hota, then why are you paying more? Shouldn't that be a question any of us should ask? Monica, Jeannie, Pooja, if everything is fair, then why am I paying more, sir? जब आप fair valuation की बात कर रहे हो, then why am I doing this? इसके बाद भी you are getting a balancing figure. It means you are paying something above the fair value, yes or no? If I'm paying something above the fair value, why am I taking it to goodwill? Why am I not taking it to P&L? Yet another contentious issue that is there being discussed by the International Accounting Standards Board today. Okay. Nonetheless, we take it as goodwill. Okay. Somehow we are unable to digest the fact that this should go to the P&L. And this is not for anybody in particular. This is for the whole fraternity, even at the global stage. Okay, even at the global stage. Because yes, standards came from there, right? These standards have come from there. Our institute has meticulously done carve-ins and carve-outs to suit the Indian scenarios. But largely the principles come from there. So therefore, this goodwill is something which is coming from those standards. So now the deliberations are, when everything is at fair value, is it really fair to recognize goodwill? That is something which we can wait and see what the new standards or amendments will give it. Okay, all right, fine. Okay. Okay. Change in probability of realizing a pre-acquisition deferred tax asset of the acquirer as a result of business combination. Acquirer recognizes a change in the DTA, may consider it probable that it will recover its own DTA not recognized before the business combination. Should not include it as part of accounting. Okay. Please go through this after business combination. You will understand it better. Okay. Because then you would have studied something there. Then you can correlate these two things. Okay. So this one, you do it after business combination. Okay. You will be in a position to understand this later on. Okay. All right. Fine. Now, okay. Okay, do this for homework. This is exactly the same set of questions that we have done. In our question, the data was given in a table format. These are the assets, these are the liabilities, this is the purchase consideration. That is the book value, fair value, tax base, calculate the deferred tax asset or liability. Here, if you read it, A Limited acquired shares for a cash payment of 25 crores. It is the group policy to value the non-controlling interest in subsidiaries at fair value. The market value of an equity share can be used for this purpose. Okay, this part, this one paragraph after business combination. Because what is non-controlling interest at fair value, all of that you can understand after business combination in AS 103. Consolidation se pehle you will do business combination. Business combination, I think you will have some 5 to 6 sessions or 4 to 5 sessions. So in that, in the first or second session, you will come to know what is the meaning of NCI at fair value. The moment you come to know that, do this, read this paragraph, you will understand it. On 1st April, the individual financial statements of B Limited, that is the target or subsidiary, okay, or target company, showed the net assets at 23 crores. The directors carried out a fair value exercise at 1st April 20x1, that is the date of acquisition. The following matters emerged. Property having a carrying value of 15 crores at 1st April 20x1, estimated market value of 18 crores. Carrying value given, fair value given. Plant having a carrying value of 11 crore, market value 13 crores. Again, same thing. Inventory cost of 2.5, market value 3 crores. Again, same. Fair value adjustment not been reflected in individual financial statements of B. In consolidated financial statements, they will be regarded as temporary differences for the purposes of computing deferred tax. The rate of deferred tax is 20%. Assume that current book value equals the tax base. Calculate deferred tax impact on above and calculate the goodwill arising on acquisition of B Limited. I think you can definitely do up till here. Calculate the deferred tax impact on above. And once you do business combination, you will be able to calculate the goodwill. Can you do this for me later on? Yes?
Yes, sir.
यहाँ तक, from here till here, you should not have any problem till here. Goodwill and then that NCI at fair value, once you do your business combination, you please go through that. Okay? All right, fine. Okay, next. Okay, so now coming to this particular question. PQR Limited, a manufacturing company. I'll just take another 10-15 minutes and then wind up. It's better I take a little extra on the weekends, because on the weekdays I normally leave about 10 minutes earlier. Okay. PQR Limited, a manufacturing company, prepares consolidated financial statements to 31st March each year. During the year ended 31st March X8, the following events affected the tax position of the group. QPR Limited, a wholly owned subsidiary of PQR Limited, incurred a loss adjusted for tax purposes of rupees 30 lakhs. Okay. Income Tax Act does not allow QPR Limited to transfer the tax loss to other group companies. However, it allows QPR Limited to carry the loss forward and utilize it against the entity's future profits. However, the directors of PQR do not consider that QPR will make taxable profits in the foreseeable future. During the year ended March 20X8, PQR capitalized development costs which satisfied the criteria as per Ind AS 38 intangible assets. The total amount capitalized was 16 lakhs. The development project began to generate economic benefits for PQR from 1st January 20X8. The directors estimated that the project would generate economic benefits for 5 years from that date. The development expenditure was fully deductible for the year ended 31st March 20X8. On 1st April, okay, fine, we'll come to this later. First one, 30 lakh rupees of tax losses. Will I recognize a deferred tax asset on that or not? Bolo. Yes?
No.
No. Monica, confirmed?
No, sir.
You will not recognize. Why?
सर प्रॉफिट डायरेक्टर्स भी ऐसा अज्यूम कर रहे हैं कि प्रॉफिट नहीं, यानी टैक्सेबल प्रॉफिट फोर्सेबल फ्यूचर में नहीं होगा ऐसा.
Therefore, do not recognize. Monica, confirmed?
Yes, sir. Do not consider the
Do
PQR
not.
value.
Yes. तो वो खुद ही कह रहे हैं कि हमें नहीं लग रहा हम आने वाले सालों में प्रॉफिट करेंगे. So therefore, do not recognize the DTA. Do not recognize DTA. Okay. All right. In this case, 16 lakh capitalized value. Yes. The total amount capitalized was 16 lakhs. This is in respect of the intangible asset. What is the life of this intangible asset? 5 years. Economic benefits for 5 years. And in this year, the depreciation is for 3 months because it was capitalized from 1st January 20X8. Yes or no?
Yes, sir.
So depreciation will be how much? 16 lakhs divided by 4, 4 lakhs by 5, 80,000. Therefore, carrying amount is equal to 16 lakhs minus 80,000.
20,000.
15 lakh 20,000. What will be the tax base?
16 lakhs, sir. Complete.
ध्यान से पढ़ो बालिके. The development expenditure was fully deductible. So tax base
नील
रहेगा कि
Nil.
0?
Nil. हाँ.
Okay. Tax base will become 0 because it's
0.
fully hitting the P&L. And therefore, I should be recognizing a DTL,
एल
deferred tax liability on 15 lakh 20,000. Okay. The last one is again similar to the financial instruments question that we did. Okay. So my advice after financial instruments, Shanti se kar lo, because for your own knowledge sake, you can take that question as a base and try to do this. Okay. कर सकोगे तो ठीक है, नहीं कर पाओगे, there is nothing wrong in this. Once you get to know your financial instruments, you can do this. Okay, it's perfectly fine. Explain how each of these events would affect the deferred tax assets or liabilities in the console balance sheet of PQR Limited Group. The rate of corporate tax is 30%. Okay, so that's it. All right, fine. Now, share-based payment transactions. Okay. What happens is, share-based payments. We have done it, right? You remember we recognize something in the SBP reserve, right? We recognize something in SBP reserve, or we recognize something as share in the case of stock appreciation rights. In the case of stock appreciation rights, we recognize the financial liabilities. Yes. So in all these cases, you are ending up recognizing an expense for financial reporting purposes, but the tax authorities may not give a deduction until the share options are exercised. Until the share options are exercised. Share options exercise करने के बाद SBP reserve value comes to 0. Do you agree to that?
Yes,
Yes.
sir.
Yes. So ultimately, suffer तय कौन कर रहा है? It is the SBP reserve account here. Yes. SBP
Yes.
reserve starting में कुछ भी नहीं था. Then you suddenly made an issue and then the SBP reserve went up. Then as and when the vesting period passed, exercise period comes, it tapers down to 0. Do I recognize SBP reserve under the tax regime? Answer is no. So under the tax regimes, it is possible that this is 0. This is 0. And therefore, can I say that starting is 0, end is 0, but in between, there is a movement on the financial reporting side in the SBP reserve account. And therefore, is this giving rise to a temporary difference? Yes.
Yes.
Yes, sir.
होगा ना डिफरेंस, टेम्पररी ही होगा, क्योंकि आप शून्य से शुरू कर रहे हो, आप खत्म भी शून्य पे कर रहे हो. Only thing is, in financial reporting, there is a recognition followed by a derecognition. And therefore, this is again a temporary difference for which we will have to end up recognizing the DTA or a DTL as the case may be. Okay? All right. Fine. So recognition principles for deferred tax arising from a share-based payment transaction. If amount permitted as a deduction in future periods is not known under the tax laws, you shall be estimating it. Example, tax deduction based on share price of an entity on the date of exercising the options. Then measurement of the deductible temporary difference would be based on entity share price at the balance sheet date. Okay. So, due to the above, the amount of tax deduction or estimated future tax deduction measured above may differ from cumulative remuneration expense. Okay. So then the excess of the associated current or deferred tax, you will recognize it directly in the equity item. Okay. So just pad lena here, you will be able to understand. Okay. We will look at one of these illustrations for a better understanding. Okay, that should make our job easier. Okay, fine. Okay. All right. On 1st April 20X1, P had granted 1 crore share options worth 4 crores in fair value, subject to a 2-year vesting period. The income tax law permits a tax deduction at the exercise date of the intrinsic value of the options. Intrinsic value of options at 31st March X2 was 1.6 crores and at 31st March X3 was 4.6 crores. The increase in the fair value of options on March X3 was not foreseeable at 31st March X2. Options were exercised on 31st March X3. Give the accounting treatment for deferred tax for the period ended March X2 and March X3. Assume that there are sufficient taxable profits available in the future against any deferred tax assets. Tax rate applicable is 30%. So let us have a quick look. So first thing is, on 31st March 20x2. First one. What is your carrying amount? What is your carrying amount of SBP reserve? What is your carrying amount of SBP reserve? Okay. One four share options worth 4 crores. The income tax law permits a tax deduction at the exercise date. Okay, ठीक है. So tax base, the intrinsic value of the option is 1.6. So tax base of share-based payment reserve is 1.6 crore for a 2-year tenure. So therefore your tax base is 0.8 crores. Temporary difference, they are saying carrying amount minus the tax base 0.8 crores. So deferred tax asset recognized is 0.24. Just a minute. Okay, intrinsic value. Acha. And then finally it is coming to 4.6 crores. Initially, the deferred tax asset will no longer be required. We can find that. Okay, fine. Okay, fine. So this is your temporary difference. 0.8 crores deferred tax asset account debit to tax expense. On 31st March X3, the options have been exercised. Current tax benefit will be available to the entity on the basis of intrinsic value of 4.6 crores. And therefore, the DTA will no longer be required. So 0.24 crores, I will reverse the deferred tax asset that was already recognized. Okay? So that's it with illustration 5. Nothing else to discuss. Okay. All right. Change in tax status of entity or its shareholders. Current and deferred tax consequences would go in the P&L, except for cases where they go to equity, you take it to equity. Otherwise, you take it to other comprehensive income. This is just your disclosures, what all we are having as part of disclosures. What is the component of tax expense or income? Tax related to items directly charged to equity, recognized in statement of other comprehensive income. Relationship between tax expense and accounting profit. So you should be able to give a reconciliation between the accounting profit and the tax expense that you are recognizing. Because see, there is a rate that is there of say 25%. Now, clearly the tax expense that is hitting your P&L will not be 25%. There could be some permanent differences. There could be some deferred tax adjustments. There could be some previous year expenses allowed in the current year for tax purposes. So all those things we should be in a position to explain by virtue of a reconciliation. So what Ind AS 12 requires is an explanation to be disclosed in the following forms: a numerical reconciliation between tax expense or income and the product of accounting profit multiplied by the applicable tax rates, disclosing the basis on which applicable tax rates are computed; numerical reconciliation between average effective tax rates and the applicable tax rates, disclosing the basis on which the applicable tax rate is computed. Either you do it on an amount level or you do it on a tax rate level. Your disclosures of reconciliations between accounting profit and taxable profits have to be given. So this is your most important disclosure for the purposes of Ind AS 12. Okay. Rest are all regular items. So these examples, go through them for homework. Okay. All right. Fine. Okay. You can go through this illustration number 6, which is there. Yeah. So A Limited's profit before tax is 100,000, whereas taxable profit is 104,000. The difference arose as follows. On 1st February, it acquired a machine for 120K. Depreciation is charged on a monthly basis for accounting purposes. Under the tax laws, the machine will be depreciated for 6 months. The machine's useful life is 10 years according to Ind AS as well as for tax purposes. In the year X1, X2, expenses of 8,000 were incurred for charitable donations, which are not deductible for tax purposes. Prepare necessary entries taking current and deferred tax into account. Tax rate is 25%. And also prepare the tax reconciliation in absolute numbers. So we start off with computation of taxable profit. That is, it starts off with 100,000. Donations not deductible is 8,000. Depreciation 120,000 for 10 years. That means 120 months. So that will be 120,000 by 120,000 per month. So 2 months depreciation I already have for the books. And for income tax, it is for 6 months. So a further 4 months of tax depreciation is allowed. So your taxable profit is 104,000. So your current tax is P&L account debit to current tax liability. Okay. 26,000. Is this okay, everyone? Till here, is it okay?
Yes, sir.
Yes. All right. Now, coming to the next one, deferred tax. The machine's carrying amount is 118,000. This is your carrying amount, whereas 114,000 is your tax base. So this gives rise to a DTL. So I will be recognizing a DTL, P&L account debit to deferred tax liability, 4,000 into 25%, so 1,000. So tax reconciliation in absolute numbers, profit before tax as per Ind AS, 100. This is what is the reported profit. On that, the tax should have been 25. But expenses not deductible is 2, so 27,000. Rate reconciliation, applicable tax rate 25,000, not deductible for tax purposes 2%. So therefore, your average effective tax rate is 27%. The impact of depreciation won't come because I have booked the current tax as well as a deferred tax implication. So depreciation is already taken care of in the total tax expense, which is your current plus deferred tax, which is your current plus deferred tax. Have you understood? Yes. Okay. So that takes care of this. Then you can skip this question. This question is not required. Disclosure 5, change in tax rates. Disclosure 6, unrecognized deductible differences, unused tax losses, and unused tax credits. 7th, temporary differences associated with investment in subsidiaries, etc. Amount of DTL, DTA, or income expenses. Discontinued operations, dividend tax, disclosures in case of business combination, deferred tax asset and evidence based on future taxable profits, dividends, related contingencies if you have, changes in tax rates or laws is something that you will be going through. Okay, so go through these 2-3 questions for homework. Nothing else is left. This is just a theory question. Okay, all right, fine. What they are saying is your deferred tax is there based on the earlier rates. Now the fresh rates are there. So your deferred tax balances will undergo a change. That balance will typically go to your P&L. Okay, so that is the question. And then there is this one question, A Limited prepares financial statements to 31st March every year. The following information relates to transactions. A has a 40% shareholding in L Limited. A purchased the shareholding for 45 crores. Shareholding gives A significant influence over L, but not a control, and therefore A Limited accounts for its interest using equity method. Equity method carrying value. Carrying amount is 70 crores on 31st March X1, and on 31st March X2 it is 75 crores. In the tax jurisdiction, profits under the equity method are taxed as and when they are distributed as dividend or the relevant investment is disposed of. So current amount and then coming to tax base. In your tax base, the value will obviously appear at the cost of 45 crores. Will obviously appear at a cost of 45 crores. So what are you going to do? You will recognize the related deferred tax liability. You will recognize the related deferred tax liability. Correct? 75 crores minus 45, 30 crores. Recognize a DTL of 6 crores. Is it okay? Yes. 70 minus
Yes,
45.
sir.
Yes. 70 था कि 75 था? मार्च X1 को 70.
75 तो सर
अच्छा, तो अच्छा ये मार्च X2 का पूछ रहा है. 75
X2
minus 45, 30 into 20% is equal to 6 crores. Okay. A Limited measures its head office building using the revaluation model. The building is revalued every year on 31st March. On 31st March X1, carrying value was 40 crore and tax base was 22 crores. During the year ended March X2, A Limited charged depreciation of in its statement of P&L of 2 crores and claimed a tax deduction of 1.25 crores. On 31st March X2, the building was revalued to 45 crores. In the tax jurisdiction in which A Limited operates, revaluation of property, plant, equipment does not affect the taxable income at the time of revaluation. Okay. So now your carrying amount is 45 because that is the revalued figure, but your tax base is 22 minus 1.25.
1.25
So 20.75. So temporary difference is 24.25. So again, this gives rise to a deferred tax liability.
liability.
So 4.85. So 6 plus 4.85, 10.85 is your total deferred tax liability. Are you okay? Yes?
Yes, sir.
Yes, sir.
Okay, fine. And then how much will go to the P&L? How much will go to revaluation surplus or equity? Okay. See, the deferred tax change because it was 25 crore opening, 70 tha mera investment value opening, tax base was 45. So the difference was 25, 25 became 30. 30 pay the net change was 5. So therefore impact in current year is 1 crore at 20% tax rate. So considering the increase in value of investment, accounting for increase in DTL goes through the P&L. So P&L account debit to deferred tax liability 1 crore is this entry that is passed. Head office building, the deferred tax liability at the beginning was 40 minus 22, correct? Because I started with 40 and the tax base was 22. So it was 3.6. At 31st March, the carrying amount is 38 crores prior to revaluation. And its tax base is 20.75. The deferred tax liability is 3.45 crores, which goes to the P&L, okay? This would be credited to income tax expense. After the revaluation, what is happening is the carrying value becomes 45. The new deferred tax liability is 4.85. Increase in DTL of 1.5 will be going to other comprehensive income because your revaluation is from other comprehensive income to revaluation surplus. Is it okay? ये बताइए। बस 2 मिनट, 2 मिनट, 2 ही मिनट, मैं एंड करता हूँ, 2 मिनट देना। ओके, बस खत्म होने को आ गया। ओके, ऑल राइट, फाइन। ओके, सो आई वुड रिक्वेस्ट गो थ्रू दिस वन आफ्टर बिजनेस कॉम्बिनेशन। ओके, बिजनेस कॉम्बिनेशन, बिकॉज यहाँ पे क्या हो रहा है, देर इज समथिंग रिलेटेड टू इंटर ग्रुप, देर इज समथिंग रिलेटेड टू इंट्रा ग्रुप adjustments. Okay, so go through this after you finish your business combination and consolidations. Okay, and financial instruments. Okay, all right, so ye ho gaya. Yeah, so that's about it from my side. Okay, there are a lot of interlinkages in this chapter. I will upload all of them today. Okay, I'll upload all of them. Okay, so there are a lot of intercompany, inter-standard linkages in this particular standard. So it may be a little difficult at the moment, but my request is whatever we have done is quite exhaustive from a deferred tax approach. The moment you complete these portions of other standards, you please start revisiting this. Okay? All right. So with that, I think we are done. I'll give the notes. I saw your text message, chat message, Jeannie. I'll share those notes. Okay. All right then. Thank you so much and see you. Okay. All
Thank
right.
you, sir.
Thank you.
Thank
Thanks.
you, sir.
Thank you. Thank you. Thank you. Thank you. Done. Yes.